let's look at where the Nifty is trading at. Well, it's a tight band, frankly, that we've traded at all through today. Let's pull up the Nifty 50 index. Flat on the Nifty, flat on the Bank Nifty. It's been that kind of a week also to a certain extent that we've seen. But the intraday on the Nifty will visibly show that we've traded in a very tight band. Around 120 odd points is the band that we've traded in. Just that large, kind of a fall that we saw midway through the day of trade. And thereafter we've sustained at those levels, just off those levels, of those lows that we are at this point, around 50 odd points away from the day's lows. Now, in terms of the Bank Nifty as well, you're seeing some bit of pressure on the Bank Nifty last few days. That seems to continue through today, even though we are seeing a mild recovery as we speak. But that's how the Bank Nifty is also playing out. Let's look at the heat map on the Nifty, see some pockets which are actually doing well. And today, essentially, it is some of the defense names, not on the Nifty 50, but otherwise, that are doing well. Bajaj Finance, on the back of that quarterly update, a healthy one, I must say, is 1% higher. And then you have some IT names out there, Wipro, Infi. You're seeing an HCL Tech also and TCS also among the stocks in the green. But again, you're not seeing any major movers except at the bottom of your screen. You're seeing Tata Steel down 2%, you're seeing Trent down 12%. Tech Mahindra and Aisha are also down over 1% in trade. So that's where you're seeing some stocks which are seeing pain. Trent is on the back, Tech Mahindra is on the back of a brokerage note which has come through. So we'll talk about all of that. But let's now circle back, go back to sectors. And the defense index is doing very well because the Defense Acquisition Council has cleared over 1 lakh crore of proposals, likely. But of course, that will take time to translate. Pharma is up around 0.75%, healthcare IT up around 0.5%, so those are some buzzers. Realty also up around 0.25%. Again, no major movers that you see on your screen. Metals down around 0.8%, and then you have consumption, which is down around 0.7. But Neeraj, broader markets, let's pull up the advanced decline first while Neeraj is coming in.
Yeah, I mean, broader markets have been okay, but I just want to give the key takeaways first before we get to the individual movers and shakers in the session today. So, no large impact of Jane Street action seen on volumes in the session today. So, that's part one.
Big
not on
thumbs
the
up.
price. So, that's one thing. IT stocks and Reliance, from a contribution perspective, are helping the index on the upside today. LSP may have been much lower. And retail stocks are weak, but not all are cracking, and that's the key thing. So, which is why the broader market action would be important. Look at this. Avenue Supermarts down 2%, Trent casualty of the day down 12%, but V2 retail up 4.5%, so not bad going there. Okay, let's do this and then we'll do the advanced decline ratio at the end. So now let's stick to individual stocks. The Q1 updates that came in and some of the stocks have reacted. PC12, a stellar number, 80% growth, guiding to more upside, reduced debt, up 16%. Marico, a couple of percentage points. L&T Finance Holdings, just about 1%. Not quite in the Bajaj Finance League maybe, but still kind of doing okay. We had some stocks which are newsmakers. So Godavari Bio got a patent for a cancer drug in the US. It just astounded me, the announcement. It's up about 5%. Sapphire Foods and Devyani, because of this whole conversation of a possible merger between them. So I think Sapphire Foods has certainly had the sapphire zing to itself in trade. And then I think we saw some stocks at 52-week highs, including a Laurus, Asahi India Glass and Poonawalla FinCorp, and NSCL continued to rise higher. So yet another day wherein NSCL Industries is up 4%. If we can just get the advanced decline ratio now once to just show you that the broader markets are quiet. I mean, look at that. I mean, not as bad as yesterday, Harsh.
Yeah.
But we'll be okay with it.
But that's how the week has been. We've had a bit of a consolidation all through the week, Neeraj, and that seems to be playing out even now. Those are some names for you. And Credit Access, obviously, on the back of the quarterly update that came through, and some of them moving around because of that. DCM Shriram is down 4.5% yesterday. By the way, Neeraj, you missed that move. 19% move on DCM Shriram yesterday. So just for context, viewers, that stock is seeing some pressure today. But let's call in Ruchit Jain. Let's take some views. Ruchit, how are you looking at the index, Nifty, Bank Nifty?
Yeah, hi, very good afternoon, Harsh. Very good afternoon, Neeraj.
Good afternoon.
Well, in the last 3 or 4 days, what we have seen on the index front seems to be more of a time-wise correction within an uptrend. because if you look, it has been trading within a narrow range, but in this entire range or whatever smaller corrections that we have got, the index has not yet breached even its 20-day exponential moving average support, which is around 25,200 levels. So I think that we can clearly see that some or other sector stands out on a particular day. In Tuesday's trading session, it was the PSU banks which had done quite well. In Wednesday's trading session, it was the metal space which outperformed. So every day you can see some of the sector which sees some buying momentum. But overall, yes, the supports are intact. Until the supports are intact, we believe that it's just a consolidation phase which is going on, which is a part of an uptrend. And once this time-wise corrective phase is over, we should see a resumption of the broader up move. So 25,200 is the level that we are watching out on the Nifty front. Until that is intact, I think it remains a buy and dip market, and one should use declines as buying opportunities.
Declines as buying opportunities, but do you like the bank Nifty over the Nifty, Ruchit? Give us that perspective.
So if you look at the bank Nifty components, then most of the heavyweights from the bank Nifty index have seen some sideways move, just like the benchmark that we have saw. The bank Nifty index is also trading around the 20-day MA, but the only difference is that the momentum which is there is not the RSI setup is not that positive in the banking index front. So momentum wise, we believe that whenever the market resumes its uptrend, maybe Nifty would be the first to move higher. It may be led by some other sectors other than banking first, maybe IT or any other names. But yes, rather than bank Nifty, I think comfortable is more in Nifty because the stop losses are lower over there. Bank Nifty support is mainly coming around 56,000 to 55,800 zone, which is still about 800 points lower than current levels. So from a risk reward ratio perspective, I think Nifty should be preferred over Bank Nifty. But overall, as I said, the trend is not negative there too. It seems to be more of a sideways trend, but just from a risk reward perspective, I think Nifty is better placed.
What about your ideas, Ruchit, for this afternoon?
So there is a couple of recommendations on the long side. One is Ultratech Cement. We are quite positive on this name mainly because the stock has given a breakout this week from 1 years of consolidation phase. If you look at last 1 years of chart in Ultratech Cement, there have been 4 to 5 attempts around 12,200, 12,100. When the stock, whenever it comes around that range, it used to take resistance. This week, just a couple of days ago, we have seen that 12,000 stock giving a breakout about 12,200 level. So we believe that going ahead, this is the start of a fresh momentum after 1 year of consolidation. So at current levels, Ultratech looks good. One can buy with stop loss below 12,100 as the earlier resistance should now become a support. And on the high side, we can see levels around 12,900 to 13,000 in the short term. And IGL is one name which is looking quite positive. Today, post that news flows, we have seen a good momentum in both MGL as well as IGL. Now, technically, IGL has given a breakout from a symmetrical triangle pattern with good volumes today. So, that should stand out in the short term, and we should see a follow-up move because the stock, if we see the last 12 months also, the stock has not yet performed much compared to what we have seen in the broader markets. So, I think from a risk-reward ratio perspective, we could see a good follow-up move in IGL from current levels. So, IGL one can buy with stop below 217 for potential short-term targets around 240.
Ruchit, some movers as well, and I want to quickly pull a couple of those out. When I'm looking at a Trent within the Nifty 50 pack, do you have a view with regard to a Trent 12% lower at this point?
So technical structure has weakened today because of this huge gap down opening which we have seen. And it's not just in today's trading session, but this is one of the high beta names which usually we have seen in last 3-4 years that whenever the mid caps and the small caps of the broader market does well, we used to see outperformance in this a significant outperformance in this stock. But this time around, if you look at the data of last 2 or 3 months when the broader markets have seen a good up move, you have not seen participation on any kind of high volume bars coming in Trent Limited. So I think already that relative underperformance was there in this leg of up move in last 2 or 3 months. And today's gap down suddenly, brings in another resistance. This gap area would be seen as a resistance. So I think, that underperformance, this clearly an indication that that relative underperformance which is there, that could continue, further for a while.
Okay, Ruchit, just one quick follow-up, and there are a few stocks which are consistently hitting fresh highs in today's session, and we marked 3, right, which is, I think, Poonawalla FinCorp, which came out with a good quarterly update, or an Asahi India, or a Lotus Labs. Any thoughts on any of them? Because they've all run, right? Would you take money off the table in any of these 3, or would you stay long in any of these 3? Would you make a fresh purchase in any of these 3?
Fresh purchase will not see a good risk-reward ratio considering that
Exactly.
last 4 or 5 trading sessions. I think these stocks have already seen a run-up. But Neeraj, as we know that the market is not in a price-wise corrective phase. The indices are more into time-wise corrective phase. So there would be many pockets, especially which are trading around 52 weeks highs. We can see that outperformance getting continued over there. So I believe that stocks such as Lotus Labs is there, Poonawalla FinCorp is there. They could continue to move further higher from current levels. So any existing positions if there are which are bought at lower levels, they should continue to ride the trend.
Okay. Retail is interesting because V2 retail actually came out with a good quarter and did a about turn after a slight bit of sluggishness yesterday. So bear that in mind. And then today, what's also broken down are some of the capital market related stocks, right? And would love to know, Ruchit, if you have a view on a BSE, on Pharma, or an angel one.
So I'll start with the Nifty Capital Market Index itself. Since we have seen a good outperformance from this index till the month of June. Now, what we can see that at the start of June, exactly about 1 month ago, the Nifty Capital Market Index had hit a high of around 4750 when the RSI was around 94-95 level. Now, yesterday's high, if we see in the Nifty Capital Market Index, it's exactly the same, 4750, around 4750. RSI level is around 80-81. So this clearly indicates that while the index has made a similar high to what was there 1 month ago, the RSI has made a lower high, and technically we call it as a negative divergence. And when this divergence gets formed after a decent up move, then we generally see a follow-up correction or a profit booking. So I think today may be the start of that corrective phase or a profit booking phase in the capital market segment. Although this does not change the longer term trend for the capital market space, but I think yes, in the short term, this segment should take a pause and we should see at least a small corrective phase, maybe time-wise or a price-wise correction before we see any kind of resumption of the uptrend.
Okay. All right, Ruchit. Thank you for that. We'll in fact let you go on that note. Thanks for joining us this afternoon, giving us all of those views. Let me bring in, corporate voice as we always do. Srinivasan Gopalan, CEO at AIS Infra Solutions, here with us to, of course, discuss the most recent order wins. Mr. Srinivasan, talk to us about those couple of orders you won, one today as well, and you're seeing plenty of zing on your counter because of that. What are these wins and what do they do in terms of how quickly do they translate? Give us the timing and the relevance.
So one is from a relevance perspective, this is a project in Bangalore. It's a real estate project and the developer has appointed the subsidiary of AIS Infra, which is AIS Uniturn, to complete the project, to start and complete the project end to end. So the project has land in it and we need to get approvals, do the contracting, sales, collection, supply materials. So the entire gamut of end-to-end solution, which is the actual thesis, ethos of AIS Infra. This is that contract that we have won. Approximately it's around 21.9 acres of land in a very pristine view. I mean, 3 sides of mountains and lake facing. So this is the project that we have won yesterday.
Okay. Mr. Gopalan, just in order to try and explain viewers better about your firm, because you just listed as well, right? You're not technically an infrastructure company. You are more a solution providing company, wherein companies which might need infra solutions, you would provide them. So how does an order, what is the nature of an order that comes to you?
So there are 2 types of orders that comes to us. One is a very tactical one where purchase orders come to us where we aggregate supplies. For example, if someone needs to 200,000 metric tons of aggregates. So we actually aggregate the smaller manufacturers, aggregate those and provide these to large contractors. So that is one line of business that we have. The other line of business is where we are a service provider to real estate companies specifically. So in this case, what happens is the owner or the developer, he buys land and gets approvals. After that, there are a host of things that he needs to do. He needs to design, he needs to first find out what is to be done there, whether it has to be plotted development, villas, or towers that need to be done, at what price to be launched. He has to then design those products. He needs an architect for that. And after that, he needs contractors to ensure that it is executed, and then he needs to sell. So this entire gamut of services is what they give it as a package to AIS Uniturn. So this is the order that we have won for 21.9 acres of land, where we will, that is AIS Uniturn will put in its own people to develop this land and hand it over to the developer. So it's an end-to-end solution. In this process, they will need materials, for which we will provide those materials end-to-end, and we will sell their stock as well on their behalf.
Okay, Mr. Gopalan, the next question therefore would be that now that you are listed and therefore do not have those obligations, what is the kind of growth that you are factoring in for your business for, let's say, FY26 or over the next 2 years, as the case may be?
So we are in an industry, as you know, we are in a very, very dynamic industry. Infrastructure and real estate, both of them are growing significantly, right? So I don't want to put a number to the growth, and so we are working very, very aggressively towards growth. Our aim will be to surpass the industry growth significantly, and we will keep working towards that.
So you've raised money for repayment of debt. How quickly does that happen?
So it's already happened.
Okay, it's already done?
Yes.
Okay, so what does that do to your P&L, sir? Give us that impact. How much does the interest cost go down by? Have you completely repaid the debt? So does interest cost go down to zero?
So there is a 205 crores of 204 crores of debt that we had to repay as per the RHP and the prospectus, which we have completely done. We will still have some amount of interest by way of LC discounting and bill discounting, but the interest up to December, the reported numbers were approximately in the range of 25 or 26 crores. So out of that, 20 to 23 crores gets wiped off immediately. The loan has been repaid. And very soon, I mean, the results will be out for 24, 25, and we'll see the actual things there.
Good. So what's the typical margin you make on a contract that you've won today? That's my first part of the question. My second part of the question is, give us perspective on what helps you stand out in the business that you do.
So on the first one, obviously you're wanting me to reveal everything here, which is not going to be possible. One thing you can be assured that the contract that we have won has an element of service as well as procurement. So what does that mean? The service part, other than the overheads of the company, which remains the same, is directly moving from the top line to the bottom line. So you can imagine that it is going to be significantly profitable. On the other hand, on the supply of material, we anticipate around 70 to 80 crores of material which needs to be supplied to this. And we will have our reported margins coming on from there. So this order is definitely going to be significantly profitable for the company.
Okay. Mr. Gopalan, we'll leave it at that. Congratulations.
Back of the question.
No.
And on the second part of the question on what we do different, right? So this kind of a company in a professional manner does not exist, which brings in, pools in all the resources in one place and provides to a real estate or an infrastructure company. So that makes us really stand out. We are a young company, 4.5 years old, and very, very proud of what we have done, and we will continue to work hard. And we are a long term. We are here to really flourish over the long term.
Got it. Well, we wish you all the best for that. Thanks so much, Mr.
Thank you so
Gopalan,
much
for joining in today.
Thank you.
Appreciate your time. Okay, on to the big story, the top story of the day, or probably for the week. Earlier today, we told you that SEBI is barred US trading from Jane Street from Indian markets in a 4,843 crore scam. And actually speaking, if you look at the net profit that Jane Street has gotten, it's 36,000 crores over 2 years. But what does this mean? I mean, and is there a different way to explain this whole thing as well? So I think that's what my colleagues are trying to do. So let's get in Alex and Sajid to explain the modus operandi of what Jane Street has done or did. And Alex, I'm interested in knowing, Jane Street spoke about 36,000 crores. Why do you have a tomato ketchup and a few tomatoes in your hand?
So I must say that I'm going to be using this over the weekend, but it's also a prop. But having said that, this explanation is meant to give people an idea of what has happened, even if they don't completely understand derivatives. Let me put that as a caveat first. And I must also state that this is not original thought from our end. It is something that has come from an explanation by Kribakaran Rajendran on Twitter. I'm just utilizing what he has already said. But here's the thing. Let's talk about what I have here, right? So I have tomatoes, half a kg, which is something that I bought on a quick commerce platform, and ketchup, which my wife will be very happy about. But imagine that tomatoes that I'm holding are representative of several tons of tomatoes, okay? Now I have gone out and bought several tons of tomatoes. What happens to the price of tomatoes? It goes up. Because ketchup is made with tomatoes, the price of ketchup also starts moving up. Now when that happens, when everybody thinks that the prices of ketchup are going to be high, in the derivative market, now imagine that there is a derivative market for ketchup as well, what happens is that the price for calls of ketchup go up and the price of put for ketchup go down. So I buy a put, I sell a call, because I think that the prices are going down. Why do I think that the price of ketchup going down? Because I know something that nobody else knows. And that something is that later in the afternoon, I'm going to dump all of the tomato, the many tons of tomatoes that I have bought at a loss. And what happens is that the prices of tomatoes fall, the prices of ketchup also fall, and that strategy that I had, the derivative contracts that I had, I reverse them, because what happens when ketchup prices suddenly fall is that the price of the put goes up and the price of the call actually comes down. So this is a very simplistic example of what has happened on several expiry days. But for you to understand what has happened with the bank Nifty, perhaps, Sajid?
That's right, Alex. That's very simplistic and not the complex F&O which we normally trade in. But what happened as part of the strategy is very simple. In the first phase, you have the stocks which are comprising of the bank Nifty being bought, or the stocks futures of those bank Nifty are being bought, as a result of which the index goes up. So when Alex is talking about tomatoes, the price of tomatoes going up is because of the kind of demand which is now coming in, and it goes up there. Simultaneously, what happens is that they go and sell the bank Nifty options. In that case, what Jane Street has done, as per SEBI, is that they have cheaper put premiums, so they go and buy the puts and they sell the expensive call premiums. So there's that trade which is coming in. In the afternoon is the reversal of the trade that happens. They reverse the entire cash market position and the futures position. So when they bought in the morning, they're going to sell it down, and when they sell down, the premiums get impacted because the index gets impacted because of the sell. So the premiums which were low in the morning shoots up for the call, and the premiums which were high in the morning for call falls down for the call, and they reverse the trade, and the differential in the premium is what they make in profits. In the process, they make a small loss with respect to the cash market and the futures trade that they have done, but the profits in call and put differential, premium differential, is very high, that it takes over the entire, it takes care of the entire losses that come into play. So that's the strategy which was played by Jane Street, and that's one of the strategies, because SEBI has only done an exercise for 21 days. This entire deal or trading was happening from Jan 1st, 2023. 2023 to March 31st, 2025, and 21 days is the only one which is done. They've also done some other strategies where they go and sell the bank Nifty at the end of the day towards the last half an hour, so that the index falls down and they make profit because of that. And in some cases, it's done with the Nifty options and Nifty futures as well, where they buy and sell Nifty futures and create a volatility in the index in the last half an hour of expiry, and that leads to the premiums shooting up, and the differential is what they make in profits. So the total profits, if you look at what Jane Street has garnered, is around 44,358 crores during that period. In the stock futures, they made a loss of 7,200 crores. In index futures, they made a loss of 191, and in cash market, they made a loss of 288. So on a net, what Jane Street made was roughly around 36,671 crores in profits, and that's the profits which Jane Street made, and that's the loss which the retail investors made on the other side, because they were the losers at the other side.
Sajid, I find myself with tomato ketchup that I don't necessarily need. I will trade you for a dozen eggs, which I can use over the weekend.
But that would be another strategy for that.
But that won't make a wife too happy, Alex.
That is true.
The question is, are you wanting to buy a call option on that trade of Alex? I'm willing to buy the put on the other side.
Well, I don't do derivatives, Neeraj, so I'll stay away from this.
Which is what most retail investors should also follow.
Yes.
But anyways, that's a very innovative way of explaining, and at a very detailed explanation factually by what Sajid has done as well. So Alex and Sajid, thanks so much for putting this into the book. We need to take into a break, but we leave you with an important word from Tin Nguyen of Natixis on the global top story of the week. Listen into what she has to say about India's relative advantage with lower US tariffs than China.
I think India will be next for the deal. It's already announced by both governments. It's not very clear how that will come out, particularly on the agriculture front, because as you know, the US for the Vietnam one is very important because it says that Vietnam opened itself wide for the US, while for India, it's going to be very difficult to open itself wide for the US, given the fact that agriculture is an important vote bank and employment. But I do think that for India, it will come and the tariff rates will be higher than what it had, but at the same time, it will allow for India to still be very competitive vis-a-vis China. But it's not going to be a free lunch in terms of being able to export to the US. It means that it's going to rely on India to actively make sure that there's no transshipment with China.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
it's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. Let's quickly look at where the markets are settling in at. We're in the last hour of trade or so. Let's pull up the Nifty. Well, Concord is one of those which is down 20% in trade today, but flat on the Nifty 50, absolutely flat. Oh, apologies. Concord has a bonus issue today.
Bonus adjustment, yes.
And hence that's a bonus adjustment. I stand corrected. But flat on the Nifty 50, we're seeing a slight bit of mild recovery from the lows of the day. We're around 60 odd points higher. And that time on the show where we bring in Somin Sarkar, who gets us all of the chatter from dealing rooms that he picks up all through the day. And Somin, what are you picking up today on Heard on the Street?
And multiple stocks that remain in focus. Firstly, it's Bosch. Now, the stock has been gaining for the last couple of sessions, and what dealers are indicating is that there's a potential buzz on the street that there could be a merger between the listed Bosch unit and the unlisted unit. So that's the reason the stock has been gaining in trade of late. Apart from that, Castrol is another stock which dealers are indicating that smart influential investors have been buying into this counter on anticipation of the fact that the BP stake sale announcement could come in anytime soon. Dealers are also indicating that Aramco could be the likely buyer of BP's stake in Castrol. So keep an eye out for Castrol as well. Wendt, here dealers are indicating that big investors, big HNIs have been buying into this counter on from long-term perspective. So keep an eye out for Wendt as well. They're expecting at least a 30% move in the stock price going forward over a longer period of time. When it comes to Piramal Enterprises, dealers are indicating that there are buy flows on institutional desks. Both DIs and FIs have been accumulating this counter in trade. And when it comes to Oswal Pumps, dealers indicate that large HNIs have started to buy this counter yet again on anticipation of strong earnings going forward from Oswal Pumps. And lastly, when it comes to Aurobindo Pharma, the stock has been gaining for the last couple of sessions. Dealers indicate that strong buy flows have been seen in this counter as as investors are taking buying Aurobindo Pharma as a bet towards finalization of the US-India trade deal, and that's the reason the stock has been buzzing for the last couple of sessions.
So I was just wondering, how would Aurobindo Pharma benefit from the same, like every other pharma stock?
Yeah,
would?
exactly.
Okay.
But Aurobindo Pharma is on valuation front, it's on the cheaper side, and also they had recently started or restarted their penicillin G plant. So multiple triggers is what they are seeing for Aurobindo Pharma, and that's the bet that.
In fact, one of the largest exposures, right, from generic Indian companies.
Right.
Okay. Well, watch out for this. Thanks a lot for that, Sumit. Thanks for getting us all those updates. Nilesh Jain of Centrum Broking, Avinash Gorakshekhar of Profit Mart on the technicals and the fundamentals. Gentlemen, thanks so much for joining in. Avinash, can I start with you this time? Because Sumit just spoke about one particular thing, right? Aurobindo Pharma may be beneficial because of the trade deal. Now, if something were to be announced over the course of the next 48 hours, are there potential beneficiaries that you've shortlisted who could gain and therefore might be worth looking at?
No, I think my guess is, within the pharma pack, Neeraj, we are positive on companies like Aurobindo Pharma, Lupin, Torrent Pharma. Typically, these companies have a very large exposure to the US markets. Even Lupin has got a large exposure. So I think, once there is clarity in the US-India trade deal, a lot of uncertainty has been, put out on the pharma sector as to what could be the kind of, tariff kind of impositions on various, pharma products. Typically, I think if there is a consensus that the Indian exports to the US market are not, put on a higher tariff level, then I think that could definitely be a near-term sentimental kind of positive driver for these companies. Most importantly, I think US is the mother market for almost all the Indian pharma companies, especially ones which are exporting largely to the US. That would actually propel a lot of fresh business now, considering that the uncertainty gets over. So I think we keep our fingers crossed, and we expect that once the trade deal is announced, once we read between the lines and see the finer points, I think pharma is one sector which I think should benefit significantly, because this is a sticky business, and I think, it's not possible that you can change your vendor immediately. So to that extent, these businesses are assured. But I think on the profitability side, we'll have to wait and watch what actually finally comes out in the trade policy.
I've requested, Neeraj, I've requested Varsha to do a bull versus bear on Aurobindo Pharma. So we'll have that as well later today. But an interesting one, stock is also perked up in trade, so doing fairly well for itself. That's an interesting conversation to have. So we will kind of dive deeper into that as well. But Nilesh, let me try and first take your view with regard to the index, the Nifty, the Bank Nifty. What are you seeing on charts? What are the levels you're looking out for?
Very good afternoon to you. Good afternoon, everyone. So in this week, we have seen a gradual decline, and today, specifically in last couple of minutes, good part is that we are witnessing some bit of rebound from the lower levels. So that is a kind of a positive sign. If we manage to close about 25,400, that will be considered as a positive close, since we'll be forming a kind of a doji candle after a particular decline. So that is a kind of a bullish confirmation that we'll get for the coming week. So overall, it's more sort of a range bound. 24,200, 24,800, that's the broader range. Narrow range could be somewhere around 25,300 to 25,600. So 25,300, 25,200, there are multiple support. Important support is placed at 25,200. So that should be the stop loss for the long position. Any decline from here should be used as a buying opportunity, because if you see India VIX, the volatility index, where we are constantly witnessing a gradual decline, it is trading very much in the comfort zone near about 12 levels. So that is giving a bit of a confidence that we may see a strong rebound going forward. Similarly, in the Bank Nifty as well, today we are likely to witness a good close near about 57,000. Quite possible that we may see closing above 57,000 as well. So that will be again considered as a positive close for the coming week. So overall setup, looks positive since we have seen a cool off in last couple of trading session. Now the risk and reward is also looking favorable for the long position. So stocks and sector specific focus is something that we are keeping an eye on. And on index front, it's a kind of a buy and decline structure.
Could there be some, by the way, we get to stock ideas as well, but Sapphire Foods, it was a publication in one of the newspapers, but which of the stocks were up. I think there is some piece around how Sapphire Food is saying that no material events regarding the reports on the merger between company and Devyani. Remember, both operate Pizza Hut amongst other things, Pizza Hut and KFC in different geographies, and they say that they are evaluating various strategic opportunities, but nothing as of now seemingly is that in. I wonder if Sapphire Foods and Devyani, both of them have come off a little bit from those highs or no. Well, no big reactions to this news flash as yet, but maybe it will happen soon. Keep these at the back of your mind. Nilesh, what about your stock recommendations for the afternoon?
So I have two buy recommendation. First of all, within pharmaceutical hospital space, Fortis Healthcare is something that is looking strong on the chart. This particular counter has hit a new record high today. Constantly it is forming a high top and high bottom formation as well. Earlier we saw a good breakout from the levels of 750. That particular level got retested. Now another leg has started on the upside. So from here, we are expecting a follow-up move towards 836. So that's the short-term target, followed by 860 on the upside. So 793 will be the stop loss. Another buy recommendation, that's the Engineer India Limited, EIL. So this particular stock is also looking strong given the kind of a breakout we are witnessing from a falling trend line. So looks positive for 258 target on the upside, 236 will be the stop loss.
Okay, so those are some recommendations for the morning or the afternoon rather. Now let's talk about the big stock through the day, and that is Trent facing pressure. Let's get in somebody who tracks Trent with an eagle eye to talk about the numbers as we have deciphered them and what could the way ahead be, and maybe an eye on the valuations as well. Mahima, that it would crack isn't a surprise. What next will be something that the street will keenly watch out for?
Right, so basically what's hurting the stock today is two things. It came out with its business update in the morning today, plus the AGM commentary that came in yesterday. I'll start with the business update first. The growth of revenue came in at 20%, which they said that they'll do anywhere above that 25% mark. So that's one thing that the street is not liking. Plus, the 5-year CAGR growth for Trent has been around 35%. So 20% street is not happy with. Secondly, in terms of store additions also, they've added 1 store of Westside and 11 stores of Zudio. They've overall guided for 250 store additions in FY26 itself. So the kind of store addition that has happened in Q1 itself is on a lower note. Probably that's the second thing that the street is not liking. Now, moving on to what the key takeaways from AGM were. Firstly, they've said that Star Bazaar has the potential to be bigger than that of Westside and Zudio. So they're focusing on branded products, that is Star Bazaar branded products in that particular area. Plus, in terms of Big Basket, they've said that it's relatively more expensive and they don't want to merge Big Basket and Star Bazaar together. The company is on track with regards to their 10 times target by FY30 in terms of revenue growth. They've already doubled in the past 2 years. Plus, they've said that the overall the store guidance that they've given of 250 is also on track, and they will do that. Plus, going ahead, they've said that core fashion business will see some kind of slowdown because of the kind of overall demand environment, and especially that is being seen in Q1 because they've grown at around 20%. And lastly, overall, they're targeting growth of anywhere between 25% to 30% by in FY26. Now, two interesting broker notes came out on Trent with different views altogether. Nuvama has downgraded Trent to hold and revise the target price to 5884 versus that of 6627 earlier. So a big downgrade there. They're saying that near-term growth is disappointing. They've cut their FY26 and 27 targets by 5 and 6% respectively in terms of revenue, and 9 and 12% for EBITDA. Plus, they're saying that pickup in Zudio Beauty and Star Business can become the next big growth levers if they're executed well. From from Macquarie, they've maintained outperform with a target price of 7,000. But even Q1 kind of commentary and growth is disappointing to them as well. But what they're saying is that the Q1 growth is disappointing because of a one-off that's linked to early monsoons as well as the India-Pakistan conflict that took place. So it's just a one-off, and that they believe that second quarter Trent will bounce back to the 25 to 30% growth that it has already guided. So this is the overall view as to why the stock is under pressure today. And of course, valuations were never cheap for Trent.
Well, never cheap. Not sure if they will be, even post this correction, also not cheap. Thank you for that, Mahima. Avinash, how do you view everything that's happening here? Because as Mahima said and spoke about and reiterated, valuations not being cheap, but growth coming off. Do you believe that that's a concern for you, or do you just believe it's a temporary blip and the bounce back will also likely happen?
No, I think, Harsh, my guess is, the first quarter commentary and the business update is disappointing, but that doesn't mean that that is the end of the road for a company like Trent. India is a very large market, as far as consumption is concerned. And I think, the company has given a fair amount of guidance that they'll be putting up another 250 stores in FY26. So I think maybe the first quarter has been a slow period. I personally feel that, the second half should be much better compared to the first half. And I think whenever such business updates are announced, the market takes it in the negative. But I think the Trent management has a approach of, promising less and delivering more. So I think, let's wait for the final numbers to be out, the business commentary to come out. And I think one can take a reasonable call on the long-term trajectory of the business. See, the retail business is a very huge opportunity, and Trent is a very well-established player. It has built a niche for itself. So I think, if at all the stock corrects in the near term, that would be a good opportunity to accumulate it. I think if you've got a 2-year kind of time frame, there's a good lot of money to be made even from the current levels.
Okay, and Avinash, would you prefer a larger player like Trent within this place, which is to play retail, or would you prefer something like a V2 and that stock also zooming in trade today? So trying to understand, how would you play retail and how would you prefer playing retail? You're clearly not negative Trent, but are you more constructive on some of the other names is what I'm trying to understand.
Yeah, see, V2 retail also has done remarkably well. In fact, they've done remarkably well in the sense that their business update and their performance has been very solid. But I think, Trent and V2 retail operate in two different segments. So my sense is that, Trent is now having a mix of both the upper segment as well as the middle segment. V2 retail is more in the tier 2, tier 3 kind of markets. So my sense is that Trent is also making an effort, in going in cities like Indore, Jabalpur, trying to hit out those market segments with their middle product segments. So I think net, I think you need to have an exposure in 2-3 retail companies, if you want to have a retail kind of basket portfolio. And that is definitely a good strategy, because I think overall the market opportunity is large. Every company has got its own product strategy. And obviously the market is huge enough for all players to grow. But I think you need to take a longer term call. Retail is not a short term story, Harsh. You need to take at least the next couple of years if you want to stay invested here.
Point taken. Nilesh, do you have a view with regard to a Trent and a V2?
Right. So Trent, today we have seen a big crack in this particular stock with a good volume participation. So there could be possibility of another leg on the lower side. But I think it has a very strong support near about 5,000. So if at all we see any dip towards 5250, maybe near about 5150, that might get bought into. Stop loss should be placed below 5,000. We are not advising to go long in this particular counter, but if somebody is already holding the long position, can keep a stop loss near about those levels. Now coming to V2 retail, this is comfortably placed currently and looks positive on the chart for 2000 plus kind of target from a short term perspective. So structure wise, this looks positive. One can keep a stop loss below 1880 and long position can be initiated in this particular stock.
Okay. Well, there are some big moves today, and Avinash, I doubt you track PC Jewelers, but the point that they have made when they have given their update, which is that they have shown an 80% growth because of great festive demand and great wedding demand. That would hold true for every other jewelry company, I would reckon, right? So is it a good time to be constructive on some of the jewelry names ahead of their quarterly updates or the results?
No, I think, frankly, we don't track PC Jewelers. Our sense is that I think the larger players like Kalyan Jewelers, Titan, these could be better bets. And I think, yes, despite the fact that gold prices had gone up, and now, some cooling has come in the gold price moment. I think finally, India is a very huge market for gold, both in terms of primary gold as well as jewelry. And I think typically, during festive times, you see a big sporadic kind of rise in demand levels. So my sense is that somebody who wants to put a small allocation can look at bigger companies like Kalyan Jewelers or maybe a Titan or even a Senco Gold. I think PC Jewelers, according to me, we'll have to wait for the numbers to pan out and see what is the consistency in their performance. Because in the past, there have been a lot of compliance issues. There have been a lot of inconsistency in their numbers. So I think it's always better to stick to established names in the industry, despite the fact that the overall market for gold jewelry appears to be quite positive. We'll wait for the Q1 numbers to come out, but typically I believe that the first quarter may not be great because typically demand gets a big fillip only in the second half of the financial year.
Okay, let's talk about some of the other key buzzers. Ansh Johnson with why is it that GMM Pfaudler, Prime Focus and Lloyds are in focus? Punch.
So for Lloyd Enterprises, they have acquired 50% stake in Prakar Estates and Promoters LLP. The acquisition is for about 140 odd crores and the acquisition is to be completed before 15th of July 2025. So let's understand what the Prakar Estates is engaged in. They are engaged in acquiring and operating mining assets and they own 63% in Geo Mysore Services India. So Geo Mysore holds in mining lease for Jonagiri Gold Project. So through this acquisition, Lloyd Enterprises will own 31.5% stake in Geo Mysore Services via the acquisition. Second on the list is Prime Focus. The stock is up 50% this month. The company has announced strategic initiatives to enhance its capital structure. They will be issuing preferential shares worth about 5,500 odd crores, and they will approve. And the board has approved 46 crore equity shares at 120 rupees per share, and it will be funded by cash consideration and by a way of swap. So let's also understand the breakup. It would be a 43 crore shares for acquiring DNEG, a subsidiary of the company, and 3.25 crore shares for 390 crores in cash. Third one on the list is GMM Pfaudler. Now they have acquired, their subsidiary has acquired 100% stake in Semco Technology Limited. The acquisition is valued at about 158 odd crores on a cash and debt-free basis. The deal will be funded through a mix of internal accruals and debt. The transaction is expected to be completed by Q2 FY26. This will be a strategic acquisition by GMM Pfaudler, and post-acquisition the mixing business revenue is expected to be around 500 odd crores.
Okay, thank you for that, Vansh. So those are some names to keep on your radar and some buzzers as well today. The other one which is buzzing away is a Veranda Learning. Nilesh, do you have a view on this one? 14.5% up. It's flying away in trade.
Well, Harsh, I do not really track this particular account.
Sure.
I need to check.
Sure. Okay. Also keen to understand, Avinash, we were talking retail, but core FMCG. Is Marico at all something that stands out for you? And please give us the perspective even from a valuation standpoint. So just give us that view.
No, I think, Harsh, as far as the FMCG market is concerned, I think the first quarter may not be a great quarter for most of the FMCG companies. I think we have been hearing on the ground reports that volume growth could at best be 3 to 4%. And I think players like Marico, Dabur, typically Godrej Consumer, I think we have not yet seen the kicker in volume growth happening. And I think hopefully, I think once the Q1 numbers are out, the commentaries are put out by the management, we'll get a sense as to how rural demand has started trickling in. Because for most of the FMCG companies, rural demand is a very big demand driver. And unfortunately, even as of now, we don't see any major kind of demand revival for these companies. So, unless volume growth gets to levels of 7-8%, I think we are not going to see a very strong push in their profitability numbers. So I think even the large players like HUL, typically Godrej Consumer, Dabur, Marico, we have a cautious stance on these companies. We believe that, let the first quarter numbers come out. We believe that the first quarter numbers may not all that be great. And I think you could see some pickup from the second quarter. So till that time, I think it's a cautious hold from our side.
Avinash, also curious to understand your view with regard to some of the lenders, and we've got a slew of lenders which have reported numbers, and because we're talking numbers, let me try and cover this as well. So let me first maybe cover the largest buzzer among lenders is credit access. Now, growth was extremely tight. I mean, it was near the flat line, likely even marginally negative. But when you're adjusting for write-offs, it's a 3% sequential growth is what they reported. They've also, the asset quality has gotten better. So that for sure seems to be improving, especially in non-Karnataka. And the stock obviously flying. Would you at all bet on some of the MFI names? And within the MFI names, are there any that you are looking at very actively? And if at all, a view on credit access? Avinash.
No, I think, see, the pain in microfinance seems to have slowly started getting ended. I think clearly the stock credit access Grameen has gone up because in their business update, they have shown some better numbers. My sense is that maybe the first quarter could be a stability kind of quarter. The second quarter, that is July to September, could be a quarter where I think they could get back on the growth path again. And you're right in saying that, after writing off bad assets, now they are on the revival path, and that is the key reason why we feel that with a good monsoon, with good rural demand pickup, microfinance companies should do well. I think within the microfinance pack, one bank which is largely into microfinance is Bandhan Bank. I think one should have a look at Bandhan Bank. It's underperforming for a very long time, and if the microfinance sector does well, then I think obviously Bandhan Bank also should do reasonably well. So I think we'll have to wait and watch for the numbers to come out, Harsh. But yes, this update from Grameen Access clearly indicates that the pain in the sector is slowly easing, and we may see a better quarter number, in quarter one and a stronger quarter number in quarter two.
Positive commentary coming in from Avinash as well on that one. I wonder, Nilesh, if you have a view on Z. That stock is up 2.5% and there's plenty happening on the fundamental side. I'll ask Avinash for a view, but do you have a view from a technical perspective?
Yes, Harsh, so we have seen a good rebound in this particular stock as well. It is trading in a rising channel, and also if you just pull up last 1 year chart, you can clearly see the stock has formed a good rounding bottom formation as well, and currently it is forming and breaking out from a big consolidation breakout. The breakout zone is placed somewhere on 152. So I think going forward, it will break those levels and it will move towards 165 to 170. So these are our short-term targets. We are bullish on this particular stock with a stop loss below 139. Zeal is a buy.
Okay. Well, Nilesh, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Have a great weekend. We need to slip into a break, but just quickly just mark what the indices are doing before we take that break, because it's been mildly choppy, but some fairly sparkling moves in the last few minutes of trade. Let's see what this leads to. But as we hit that break, it's an interesting word from Transrail Lighting. The stock is up almost 3% or 3.5%, so to say, and was also one of the stocks on focus on KYC today. We spoke to Executive Chairman Digam Badge, who talked about the company's project and order win pipeline.
So we can expect slightly more than what we have acquired the new project last year, because there is a huge growth in the domestic as well as international market. You must have seen from the CRISIL reports, they are projecting a growth of 7 to 8% CAGR and $20 billion of investment into the transmission sector. And also there is a huge investment in the other non-T&D sector also. So therefore we find that there will be very good order inflow in the domestic, not only in the domestic, but from the international market also. So we don't anticipate any degrowth or any kind of problem in getting orders or maintain our growth projection, what we have projected over the years.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. That time of the show where we get you the bull versus bear segment. Aurobindo Pharma is the stock which we had told you about, that we'll get you a view on a bull versus bear case. And Varsha joining us on that note. Varsha.
Well, thank you for that. But overall, the pharma sector is up today because the report says, or analyst says, that maybe the India-US trade deal, when it comes, the tariff would be lesser to Indian pharmaceutical companies, and that's the reason you're seeing many pharma companies are up in a trade today. But shifting back to Aurobindo, which is up almost 3%. If you see, let's see what is working for the company. You have strong product pipeline. The company anticipates robust growth when it comes to FY27. Now this is on the back of the biosimilar portfolio that they have, and also the high value launches that are upcoming when it comes to US market. Europe is also expected to sustain high teen growth with new launches and 6 products which are in line. But onto the headwinds, if I were to talk about, the near term headwinds would be FY26 looks muted for the company as per management, now particularly in the US due to rising competition and of course due to the declining revenue from Revlimid, that is the cancer product, which may impact FY26 numbers. But with company do have good biosimilar portfolio. They have 4 biosimilar already approved with significant approvals expected within 4 to 6 quarters, and the company has a strong foundation when it comes to overall biosimilars, and substantial revenue can be seen from FY27 to 31 in this high growth segment. But while FY26 EBITDA margin is targeted to be maintained at 21%, the company faces pricing pressure when it comes to US, and also the profitability is exposed to regulatory concerns and the tariff concerns that that the all pharma companies are expecting. But their Pen-G business, which is the next leg of growth for the company, that has a potential, potential opportunity. So the Pen-G business holds significant potential to contribute substantial to EBITDA when plant goes to at a high capacity or at full, when plant will run at a full capacity, we may see a good growth in from PenG number, because I think that's the reason why a company is expecting good growth when it comes to FY27. But lastly, the revenue ramp up from the biosimilar, if you see, is highly contingent on the regulatory outcomes and the complex dynamic competitive landscape that the company has. But overall, FY26 will be kind of muted, but FY27 can see a good growth when it comes to Aurobindo Pharma.
Okay, so that's the case with regard to Aurobindo Pharma. I mean, we've taken a view from Avinash, of course, with regard. Thank you so much, Varsha, for putting that into context. We've taken a view from Avinash, of course, on an Aurobindo Pharma. Also joining us, Amar Dev Singh, who's Senior Vice President Research at Angel One, joining us this afternoon. Amar, do you have a view with regard to an Auro Pharma 3% higher?
Yeah, actually, if you look at Auro Pharma, so what we are seeing here is that the stock was in for consolidation for quite some time, and now we've seen it break above the level. So earlier, somewhere around 1170, 1180, the stock was meeting with some sort of resistance. But ideally, if the stock is managed or stock manages to sustain above the 1200 level, we could witness a sharp rally in the stock. As far as the structure of the stock is concerned, from a short-term and intermediate-term trend, clearly there is some positive bias which has been built. Long-term, what we saw that the stock had corrected significantly, almost from 1600 levels to 1000, and then it's inching up higher. So I would say that there is a possibility that we could see this follow through, but for that it needs to sustain above the 1200 levels. So one can definitely look at this stock. Sustaining above 1200 levels, it has a potential to rally towards the 1285, 1287 level. So this is one stock definitely one can be looked at, and the stop loss needs to be somewhere around the 1131 levels.
Avinash, a view with regard to healthcare, because that's the other sector which seems to be showing some zing. Maybe not today, but in general. Do you have a view with regard to healthcare, and give us a couple of your favorites very quickly? Avinash?
Yeah, sorry.
No.
No, within this pack, Harsh, I think we like Fortis and Yatharth Hospitals and Apollo Hospitals. I think, see, hospitals is a very promising space where I think the growth trajectory is going to be very solid. I think specifically for companies, which are operating into specialities and where, obviously the margins are much better. I would say that, obviously investors who are looking at a reasonably medium to long-term time frame can stay invested here. I think Yatharth looks quite promising. It's a promising bet, from the northern India belt. It's not a very large player like Apollo, but I think in terms of numbers and in terms of the cash flows and the overall, kind of specialty kind of services, we could expect a good bump up in the Q1 itself. So my sense is, this is a place where I think every investor needs to be invested. I think for the longer term, this is a very promising sweet spot and where the runway for growth is pretty large.
Amar, what are your picks for this afternoon?
Yeah, so the first one which I've spoken about is Aurobindo Pharma, which I talked about. Looks quite good technically on the charts. So this is one stock one can definitely keep a close watch on, sustaining above the current levels. The stock has a potential to rally towards 1285, 1290 levels. And here in that case, the stop loss needs to be 1131. And the second stock I would like to talk about is IOC. So IOC, what we've seen is that the stock went in for consolidation for many weeks, almost 8 to 10 weeks, and it was consolidating between 130 on the downside and 145, 148 on the upside. Now we're seeing that that level has been breached, and if you look at it from a short-term perspective, the momentum has been building up, and also we've seen some significant volumes happening. So this is one stock one can keep a close watch on. Even on the weekly charts, the stock is inching towards a significant breakout. So this is one stock one can look at buying at the current levels with a stop loss of 141 and an upside target of 168.
Okay, well, on to more news. ICICI Pru is trending higher on the back of a block deal. Citi has also released a note on the counter, upgrading its rating to a buy. Varsha Johnson to tell us about all of this. Varsha.
Yeah, thank you for that. So yes, 1.12 million shares were traded in a block deal, and the transaction price was at rupees 648.25 per piece, and the total value of the block deal was around 72 crores. While yes, Citi has also upgraded ICICI Prudential from neutral to buy, and which determines a target price of which determines an upside potential, I would say, of 25%. Now if you see, what they're saying is this upgradation is on the back of pickup in ULIP and agility in non-ULIP and margin comfort. They expect net MF flow to rebound in June 25, and ULIP flows tend to lag MF flows, and they've raised VNB multiple to 17x from 12x, factoring 400 basis points higher decadal VNP CAGR at almost 10.5%. Company has derated 50% since September 24 owing to volatile margins and slowdown in ULIPs, but the stock is trading at 40% discount to some of its peers, providing significant comfort according to Citi. And lastly, but though they have upgraded ICICI Prudential, but the preferred plays remains unchanged for Citi, which is HDFC Life and SBI Life.
Okay, so thank you for that, Varsha. ICICI Pru, one of them, and HDFC Life, SBI Life, still the top picks. Avinash, within life insurance, and this is a space where we did some coverage today morning as well, Neeraj. Interesting, because it's been one rank outperformer, right? We've seen 48%, maybe 30% returns from an HDFC Life, which is an index stock. 27%, or rather 30% returns from an SBI Life, 27% returns from an HDFC Life. So, and these are all index stocks which have really rallied. Avinash, more legs to this one?
Yeah, I think Harsh, my sense is the bigger players like ICICI Pru, SBI Life, typically HDFC Life, these are all well-established players, and the Indian insurance market is still a very large kind of business opportunity. Typically, any move in these stocks happens gradually and slowly because the base is extremely high. But I think, somebody who's looking for the next couple of years to stay invested and wants to take a play on the insurance sector, I think HDFC Life and SBI Life could be good bets. My sense is that despite the run-up in these prices, the overall opportunity is quite promising, and I think there's a huge runway for growth available. So I think, one should look at these stocks from a long-term business angle, not from a quarter-on-quarter basis. But yes, I think business is definitely going to shape up better in the coming current year compared to last year.
Okay. So that's the first, the view on ICICI Pru. Now, there were some small names which are in focus today. Godavari Bio, a company, small cap company getting a cancer patent in Europe somewhere. And then on merger news, Sapphire in Devyani, though there has been a consequent disclaimer from both that they are probably not close to anything like this. Avinash, do you track Godavari Bio? And if not, any view on Sapphire and Devyani, the operators of Pizza Hut and KFC?
No, I think, Neeraj, we don't track Godavari Bio, so won't be able to comment on it. But I think as far as the QSR business is concerned, Devyani as well as Sapphire, I think, clearly my sense is that unless there is some strategic intent of merging, I think these companies coming under the same roof looks to be little unlikely. So I think we'll have to clarify and check out what is the authenticity of this source. But I think if it happens, then I think one will be quite surprised, because KFC and Pizza Hut compete with each other in the market, and to have them under the same entity would be a little surprising. So my sense is it's better to wait and watch before we get to know the authenticity and the clarity from this input.
Noted. Okay. Amar, just trying to think, I want to ask you for a structure on some of on this Devyani and Sapphire Foods, certainly, but I would love to know if Marico by itself has some positives to the kind of pattern that it is forming, because it's come out with a rather good quarterly update. The stock reacted a bit in the morning. Can it do more?
Yeah, I would say that if you look at Marico definitely has from almost 600 levels. The stock has rallied currently around 728 today. From the highs of the day, it is trading lower around 729, 730. And today the volumes have also been significantly higher. If you look at the last maybe 50 or 75 or 100 trading sessions, the volumes are significantly higher as of today. So clearly that shows that this could also be an important level to watch out for, because if I go back in time and look at the stock. So in February, the stock had made a high of 735, 737 somewhere, and then it had corrected all the way towards 570, 578. Then again, it had rallied towards 740 and it had corrected towards 680. So this zone of 740, 750 is going to act as a very crucial zone of resistance for Marico. So till the time the stock really doesn't take out this level, I would say entering at the current levels is definitely not advisable. Those who are long, they can look at booking profits. Overall, if you ask me, the trend for the stock definitely remains positive. On the downside, the stock has got very strong support zone somewhere around the 680, 700 zone.
Okay, opportune time at this point to bring in Anushi, who's here with the top 3 buzzers, PC Jewelers, Marico, but a third one, which is more interesting. We've spoken about the first 2. Anushi.
I'll speak about Ventive Hospitality first. Now, this is an interesting one. This stock did reach an intraday high of around 8.4% in trade. In fact, the volumes were also as high as 5 times compared to its 30-day average. Now, this stock is just away from 12% away from its 52-week high that we are looking at. But what's leading to this buzz? Let's understand that. Now, the company is expected to unlock its growth plan soon. In fact, they have set a press conference meet on 8th of July to discuss the growth plans ahead for the business and to define the hospitality sector also for the company going forward. If you look at the guidance, they have maintained an India margin target of 40 to 42%. This is from an target of 37% that we are seeing. Even the revenue is expected double from 2,000 crore to 4,000 crore. If you look at the analyst coverage on this one, it's a relatively less coverage, 3 buys while 0 hold and sell. So this brings the return potential to 13.5%. Coming to Marico now, this is in focus on the back of its first quarter business update. If you look at the volume growth, that has seen an uptick in terms of where the sequential performance is concerned and has reached a multi-quarter high as well. Gross margins are also expected to be, however, gross margins are expected to be under incremental pressure over here. Demand trends have remained consistent with the rural and the urban play which is going on. Just in terms of the segmental performance, Parachute witnessed a marginal dip in terms of where the volumes were concerned. In fact, price hikes and reductions were taken in Parachute is what we are seeing. International business is delivered a high teen constant currency growth. In terms of how the raw materials are shaping up, copra prices continue to witness sequential inflation, while vegetable oil prices have eased following the cut in import duty is what we are looking at. For the outlook forward, they expect a moderating operating profit growth, while gross margin pressures will ease from the second half of FY26. The last one on the radar is PC Jewelers, again on the back of the first quarter business update is what we are seeing. Here they have reported a 80% of a growth in terms of where the revenue number is concerned. In fact, also if you look at the debt picture, that has seen more than a 50% of a reduction considering the FY25 levels, and Q1 FY26 further debt reduction by 7.5% is what we'd seen. The company aims to be debt free by FY26 end. So these are the 3 stocks buzzing on the back of business updates and other news.
Thank you for that, Anushi. And Avinash, any views on Ventive Hospitality? And if not Ventive, any of the other hospitality chains that you like?
No, I think Ventive Hospitality has delivered very strong numbers, but it's a recent entrant in the market. So our sense is that we'll like to wait for a couple of quarters. I think within the well-established hospitality sector stocks, we still continue to like Indian hotels. Our sense is that this year will be another solid year for Indian hotels, considering that now they are going to get more aggressive on the affordable and the budget hotels. And current year numbers should definitely be much better than last year. So I think, Indian hotel definitely deserves to be re-rated, considering the fact that there is a big shortage of rooms. The average room rentals have also started moving up again. And hopefully, I think the second half will see a much stronger period for the company. So I think within both these companies, I think Indian Hotel seems to be a better bet.
Avinash, just going to quickly do some rapid fire here because we're completely running out of time and lots to talk about. Capital market plays, positive, negative, and this correction that we've seen today. Would you play that at all?
No, I think it's a positive sign. I think these companies may have a sentimental negative for today, but I think stocks like BSE, CDSL, CAMS, I think these are opportunities which investors should always buy on decline.
Realty, so buy on declines. What are your favorites, Avinash? Names?
I think we like CDSL and CAMPS. These are very, very solid businesses, typically annuity kind of businesses. And I think any decline in the stock prices offers a good opportunity if the investor has a couple of years kind of time frame in mind.
Right, we're seeing a very healthy bounce back, by the way, in markets. We're closing in on the day's highs, in fact, as we speak, just off, in fact, but we were closing in on the day's highs for quite a bit. Just seeing a bit of a cool off on that rally that we've seen, mini rally that we've seen. Avinash, let me come back to you on the realty index. Yesterday I was speaking to a real estate company, very bullish, Bombay-based, very bullish with regard to the way they're seeing business, especially given rate cuts. Are you bullish on realty? How is it looking from a valuation standpoint?
So I think, clearly real estate companies will continue to do well. I think the rate cuts will abode well for the sector. I think, players like Lodha, typically companies like Anantaraj in, Noida, I think these are companies which offer significant kind of re-rating potential. Of course, the large companies like DLF, Mahindra Life also would do well. But our sense is that I think in this sector, I think you need to pick and choose companies where there are multiple triggers. In Anantaraj, apart from the real estate business, which is a cash cow business, the data center business is going to be a very big opportunity for them over the next, say, 2 to 3 years.
And defense, Avinash, one, how would you value defense at this point? Just the opportunity is so large. Would you go as long as the next 4, 5, 6 years and value it that way? Or how would you value it? And what are your top plays within defense?
I think defense companies, frankly, Harsh, are not cheap. I think they are very fair to expensive. And I think, at these valuations, at least the next 12 months earnings seem to have been discounted in the price. So I think if you got a 2 to 3 year kind of time frame, companies like Bharat Electronics, HAL, these are companies which can offer a reasonably good risk reward. But I think you need to give a long-term time frame because the defense business is a lumpy business. You can't look at it on a quarter-on-quarter basis. But yes, I think looking at the government of India, Make in India policy, I think at least the runway for growth is at least, completely assured for the next, say, 2 to 3 years. So I think, there's no dearth of business. It's all about execution and obviously how quickly this order book actually gets executed and implemented into top line.
Now, Avinash, but what would that mean for a business like Paras Defense? Small revenues, 350, 400 crores. The stock has zoomed literally. What's more in store?
I think I heard that the stock is going to be split, Neeraj. There's a split announced in the stock. So I think probably that could be the reason. But, at these levels, buying something like Paras Defense may not offer you that kind of alpha or that kind of huge risk reward opportunity. So I think it's always better to play, larger companies with larger kind of balance sheets and with larger order books in mind. Although Paras Defense has got a very niche product line, the top line and the profitability does not justify the valuations, at least as of now. So I would, like to keep away.
20 times sales is what Paras Defense trades at.
Only?
Only, yes. If that can be said. But yes, so probably get where Avinash is coming from, where Paras Defense is concerned. But the top gainer on the Nifty, Avinash, today is Bajaj Finance. What do you make of the numbers? And at these levels, 900, 920 odd levels, would this at all feature on your buy list?
No, I think we have been telling our clients to accumulate it, as a compounder because, these kind of numbers from Bajaj Finance were definitely very good, in line with market expectations. And I think with the rate cuts announced, with the propensity to spend more, my sense is that this is also going to be another strong year for the company. So I think, we would not like to say that Bajaj Finance can give multiple, maybe multi-bagger kind of returns, but a typical 15 to 16% kind of annual return over the next, say, 2 to 3 years is something which I think is very clearly comfortable. They have a very strong balance sheet, a very strong, customer base. And most importantly, they have the liquidity to grow. So I think, definitely it's a good, bet for a positional kind of buy over the next 18, 24 months.
Okay. Avinash, from the companies that have come out with updates, and there's an APL Apollo Tubes, there is a Catholic Syrian Bank, there is Poonawalla FinCorp, etc. All of them come out with numbers. Anything that worked out for you? I mean, did you like any of them?
So I think RBL Bank has shown a decent kind of growth in numbers in the overall AUM increase in the disbursements. So I think clearly there have been some reports that some foreign investor was looking to invest in this company, which the bank has denied. I think RBL Bank would be a surprise pack, once the Q1 numbers are announced. So I think the stock has seen a deep amount of correction from its 52-week highs. And hopefully, if the numbers are much better than the street, then I think you could see a little bit of bump up and a little bit of re-rating on the stock going forward.
Amar Dev Singh is with us. Amar, what are your top closing strategies?
Yeah, I would say one is from the fertilizer space, and that is Gujarat State Fertilizers and Chemicals. So what we are seeing here is that the stock was in for consolidation, and then it corrected all the way towards 190, and currently it has moved up towards 208, and it has taken out a key zone of resistance, which was around the 200-205 zone. Having said that, if you look at it from a short-term perspective, some of the technical indicators are indicating further upside. So sustaining above the levels, the stock has a potential to rally towards 227 with a stop loss. So one can buy with a stop loss of 197.
Okay, so BTST on GSFC, noted. Some of the defense names, Amar, we're just talking to Avinash about them. I think the gains have been pretty strong. Is there any that look sustainable?
Yeah, I would say, the defense stocks, they are definitely, I would say they have a lot of interest. A lot of interest is shown by investors in stocks, and post the India-Pak war, I think a lot of interest has come back, and also the way the government has announced the spending plan. So this is a sector which one should always look at from a long-term perspective. I would say having a couple of stocks in one's portfolio is always advisable, but the big question is at what price, because sometimes we do witness a significant correction. Be it the case of, if you look at BL almost from 340 had corrected towards 240, so that was a steep correction of more than 30%. Again, it's trading at record high. So I would say that one should look at these stocks, defense stocks. So it could be BL, it could be Bharat Dynamics, and look at it more from a longer term perspective on corrections.
Now, Tech Mahindra is the other one in focus. It's one of the IT stocks which is actually languishing in trade today. We had a Macquarie note coming out. They've hiked their target price, but they've maintained the underperform rating. It's one of their marquee sell ideas, by the way. And what they're saying is the 15% EBIT margin guidance is a very tough ask even by FY27. Years of underinvestment in sectors outside telecom is a tough fix. Incumbency a disadvantage for TechM with telecom clients, and they have an ad. they prefer LTI Mindtree as far more attractively positioned. Avinash, your views on IT and TechM in particular?
No, I think even Tech Mahindra, we are slightly cautious because we feel that the dependence on the telecom sector by Tech Mahindra is extremely large, and I think maybe the first quarter may not up to be expectations. But I think companies like Persistent, KPIT, these are far better bets as compared to a Tech Mahindra. And our sense is that the tier 2 companies, Harsh, within the IT pack would be a surprise pack going forward. The larger players still are struggling with growth. So I think Persistent and KPIT would be better bets, and I think we'll be looking forward for the business commentary going forward.
Amar, as we wrap up, if you had to take a high-risk trade in an NBFC, would you take one? A Bajaj Finance, a Poonawalla FinCorp, maybe a Bajaj Housing, what have you?
So if I look at one of these stocks, so it could be, I look at Bajaj Finance for that purpose. So Bajaj Finance, what we are seeing is that the stock today has moved up, but more or less it's in a consolidation zone. It's in a consolidation zone, and I would say that between 900 and 950, that's a range for this stock. So till the time it doesn't really breach that level, it could be in for consolidation because the structure of the stock is very strong from a long-term perspective. That's the reason when the stock corrects, it's a buying opportunity. On the downside, it's got strong support on the 900 level. So any correction towards those is a buying opportunity. Major rally only above 950.
Okay, thank you so much, gentlemen. Amar as well as Avinash for joining us this afternoon. Have a great weekend, and let's quickly look at how the Nifty is shaping up at close. We've seen a decentish recovery, I must say that. 25,466 is not something that I expected to see at close today when I started this show. Let's look at it intraday as well, and that'll give us better perspective as to how far we are from the day's high. We're we are at the day's high, in fact. So clearly doing very well for ourselves on this Friday afternoon, and the recovery from the low is what's impressive, especially this little spike that we saw midway through this show. So a fantastic kind of close to this Friday, 0.25% higher on the Nifty. Let's look at the Bank Nifty as well, and I want to see whether that recovery reflects there as well. There you go, that spike on the Bank Nifty. Can we pull up the IT index, the Nifty IT index? Intraday 0.5% higher on the Bank Nifty. It was flatline when we started an hour and a half ago. There you go. So you're seeing a bit of a spike across sectors, and that's evident at least from what we're seeing on the screen. Let's look at the heat map on the Nifty. Let's see if the breadth has changed at all. And yes, it has. There is a marginal positive bias to that breadth. In terms of the losers, well, those don't change. Those three top losers remain. Tech Mahindra also languishes 1% lower. Even the gainers, not too many changes there. Largely remains the same. It's just the breadth that's tweaked a little bit, and you're seeing a bit of assistance from an HDFC Bank that's coming through on the index. So that playing out. Let's look at the contributors as well on the Nifty 50, and let's see if there are any big ones there. There you go, and ICICI Bank is one. It's done well in trade today, and then there's Infosys and a couple of others. Trent is the big laggard in trade. Let's pull up the sectors as well quickly, and the Nifty India defense, but outside of that, oil and gas has done well, realty has done well as well, pharma has done well. This screen has changed quite a bit. There's more green on this screen. Nifty metal is around 0.5% lower, and Nifty auto was one of the other laggards in trade. Last off, I want to see the BSE 500 top gainers, top losers. And before I just quickly look at broader markets, those are the big losers and gainers of the day. The Nifty mid cap, if you can quickly pull that up at close, we've closed just about the flat line, so that recovery not visible on the Nifty mid cap, and the Nifty small cap too, just about the flat line. So some bit of underperformance there. But we've got something interesting for you on this Friday afternoon. Shreyanshi, what do you have for us?
First, let's take a look at some of the top releases, and that's something very exciting. You should be booking your tickets right now, and I'm going to tell you which ones you should be looking at when you're booking these tickets. So there are two releases. Metro Indano is the one that you're looking at, and other than that, there's Jurassic World Rebirth. Let's take a look at Metro Indano first, because it's made with a budget of 100 crores. It's got a very exciting cast, like you can see on your screens as well. Made with a budget of 100 crores, releasing today. Let's take a look at the next plate in terms of the recovery. They've already recovered 55 crore rupees because Netflix has already paid them for their rights. So 40 crores is what you're talking about there. And music rights also estimated to be around 15 crores. Need about 45 crore thereabout to break even. So that's Metro Indano. But the next one that we should be looking at is Jurassic World Rebirth. Roaring reviews, at least some of them. Some say that it needs to be back in the incubator, but the budget is 1,900 crores. It's got a very interesting cast. So there's Scarlett Johansson, Jonathan Bailey as well. And in terms of the early reviews, for Metro Indano, very good reviews. And for Jurassic World, like I mentioned, slightly mixed reviews coming in there. But the last week's top performer that you should be looking at is F1, and there were of course early reviews that were slightly mixed when it comes to this one, revving up to be quite positive at this point in time. So don't go just by the reviews. If you like the cast, do go ahead and book your tickets. But let's also move on to the next plate, talk about the upcoming OTT releases, because there's a lot on the binge watch list there as well. There's Abhishek Bachchan Starer that is released on ZEE5, so that's Kali the Lapata that you're talking about. The next one is of course Thug Life. Remember that the director here is Mani Ratnam, so that's important to note. If you like him, this is something that you should be looking at. July 3rd is when this one released, and the next one that you should be looking at is The Sandman. Now this is a movie, this is in fact an OTT series that premiered in 2022, returning for its last season, starring Tom Sturridge in this particular fantasy movie as well. The next one of course is Heads of State. Also has the Desi girl Priyanka Chopra Jonas, also along with
a very stellar cast, so that is something that you should be looking at in terms of your binge playlist. But with that, let's slip into a very short break. Stay tuned to NDTV Profit.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like, no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
and welcome to Market Express, your quick wrap of all that's moving the markets, the economy and everything in between. I'm Himakshi Bahugna, and over the next half an hour, I'll bring you the top stories, key numbers and sharp insights to help you stay ahead of the curve. So let's dive straight in. Now viewers, benchmarks, the Nifty and Sensex ended the day in green. Sensex gained 220 points while Nifty closed 25,400 levels. Let's look at how the markets have fared for the week. So mid and small cap indices outperformed the benchmarks as both Nifty and Sensex reversed the 2-week gaining streak. Nifty Financial Services, Bank, FMCG, Auto snapped 2-week gaining streak, while Nifty Pharma and PSU Bank gained more than 2% for the week. SEBI bars US-based trading giant Jane Street Group from India securities market, accusing it of orchestrating a high-stake expiry day playbook to distort index prices. The firm allegedly ran aggressive strategies like intraday index manipulation and extended marking the close across 18 trading sessions, reaping over 4,800 crores in what SEBI calls unlawful gains. So one day alone saw a 61 crore rupees loss in cash trades flipped into a 735 crore rupees windfall in the options. Aegis has officially commissioned a new LPG cryogenic terminal at Pipavav, boosting its LPG storage and terminaling capacity by 48,000 metric tons. Now, the state-of-the-art facility will soon be transferred to Aegis Warpac terminals, enhancing operational efficiency. With this addition, the total LPG terminaling capacity at the site has now reached an impressive 119,000 metric tons as of March 2025. AIS Infra has secured a significant order worth 100 crore rupees from Village Wave, Bangalore. Now, the contract involves providing professional services and supplying construction materials with an execution timeline set over the next 48 months. So, this new order adds to AIS Infra's growing portfolio, supported by its current market capitalization of approximately 1,297 crore rupees. Vedanta has reported a record quarterly alumina production at its Lanjigarh refinery, reaching 5,87,000 tons, a 36% increase quarter on quarter and 9% year on year. So total aluminium production also rose by 1% year on year. In the zinc segment, Zinc International's mined metal production surged 50% compared to last year, while Zinc India achieved its highest ever first quarter mined metal output at 265,000 tons. Merger talks between Devyani International and Sapphire Foods are heating up, with Yum Brands reportedly facilitating the deal. So the negotiations could see Sapphire Foods merging into Devyani through a share swap, where Sapphire shareholders may get one Devyani share for every 3 they hold. So this move might also transfer KFC and Pizza Hut franchise rights from Sapphire to Devyani, consolidating operations. Both the companies have been experiencing slow growth, and combining their store expansion is expected to create significant synergies and strengthen their market presence in India's fast food sector. Tata's Trent reported a 20% year-on-year rise in standalone revenue to 5,061 crore rupees for Q1, adding 1 Westside and 11 Zudio stores, bringing its portfolio to 248 Westside, 766 Zudio and 29 other lifestyle outlets. So, however, the quarter faced challenges from geopolitical tensions and a weak monsoon, leading to growth below analyst expectations of 25% up. But, at its AGM, Trent remained optimistic, projecting a robust 25 to 30% CAGR over the next 5 years, and plans to add 250 new stores annually across brands. So the company has emphasized that the full year performance will be better and reflect its growth trajectory despite the near-term headwinds. Lloyds Enterprises has made a bold move into the gold mining by acquiring a 50% stake in Prakhar Estates for 140 crore rupees, with the deal expected to close by July 15 or 2025. So Prakhar Estates holds a majority stake in Geomi Solar Services India. So this operates India's first private gold mine and the Jonagiri gold project in Andhra Pradesh. So this mine has a capacity of 1,000 tons per day, aiming to produce 1,000 kilograms of refined gold annually for the next 15 years, with commercial production starting this quarter. So Lloyd's entry offers strategic advantages, including import duty exemptions and on-site processing that reduces the logistic cost, positioning the company strongly in the gold mining sector. Prime Focus shares jumped 5% today, gaining 50% over the past month following board approval of a 5,552 crore rupees preferential allotment. So the company will issue over 46 crore shares at 120 rupee each, raising funds through 390 crores in cash and 5,161 crore via share swap. So Prime Focus is set to acquire a 31% stake in visual effects giant DNEG, increasing its holding to 88.28% post the swap. So an extraordinary general meeting for shareholder approval is scheduled for July 26. Novator Capital, a key allottee, will hold a 14.4% stake in Prime Focus with special rights to safeguard its minority investment. Macquarie maintains an underperformed rating on Tech Mahindra, raising the target price to 1,090 rupees. So the brokerage doubts the company's 15% EBIT margin goal by FY27, citing under-investment outside telecom and incumbency disadvantages with telecom clients. So Macquarie expects only 12.5 to 30.5% EBIT margin and added Tech Mahindra to its marquee sell list. Yes Bank's Q1 of FY26 update shows sluggish growth. Deposits rose 4.1% year-on-year to 2.75 lakh crore rupees, while loans and advances grew 5.1%. CASA deposits dropped 7.3% quarter-on-quarter, but increased 10.8% year-on-year. So the CASA ratio fell to 32.7% from 34.3% sequentially, though up from the last year. Bank of Baroda's Q1 of FY26 update shows a robust 17.4% year-on-year growth in the domestic retail advances to 2.61 lakh crore rupees. However, global deposits fell 2.5% quarter-on-quarter to 14.36 lakh crore rupees, and global advances dropped 1.7% quarter-on-quarter to 12.07 lakh crore rupees. So total global business grew 10.7% year-on-year. And despite Q4 of FY25's 5% quarter-on-quarter growth. The Ministry of Defence clears 10 capital acquisition proposals worth 1.05 lakh crore rupees, all under the indigenous sourcing category. So this massive boost strengthens India's Atmanirbhar Bharat push. Key players like the BEML, Bharat Forge, BEL and Data Patterns stand to gain from this move. FMCG major Marico reports a mixed first quarter. Domestic volume growth hits a multi-quarter high led by improved rural demand and steady urban trends. However, rising copper prices weigh on the margins. In the oil segment, Saffola revenue surges while Parachute volumes dip slightly despite the price hikes. The company expects modest operating profit growth, eyeing margin relief from H2 of FY26 onwards. Brokerages remain largely bullish. Morgan Stanley maintains equal weight on Marico with a target of 674 rupees, citing 20% top-line growth and strong recovery in the value-added hair oils. Meanwhile, Macquarie stays outperformed with a higher target of 790 rupees, calling the Q1 update largely in line with expectations. Investors watch closely as the stock navigates mixed signals. Jefferies maintains a buy rating on Welspun Living with a target of 185 rupees. The brokerage firm believes that the looming tariff deadline clouds the outlook in the company's largest market. Mixed signals on the Indo-US trade deal add to the uncertainty, with tariff competitiveness against peer nations emerging as a key watch point. Nuvama downgrades Trent to hold and cuts its target price to 5,884 from 6,627. So Nuvama is disappointed with company's core fashion business near-term growth expectations. The brokerage firm also cuts FY26 and FY27 revenue estimates by 5 to 6%, with EBITDA lowered by up to 12%. The Bombay High Court overturned a 1,728 crore GST demand against ICICI Lombard General Insurance due to procedural flaws in the assessment. So the court criticized the tax authorities for ignoring GST Council clarifications. It ordered fresh hearing to reassess the tax liability fairly, ensuring compliance with legal standards. Citi has upgraded ICICI Prudential to buy, raising the price target to 800 rupees from 690 rupees, implying a 25% upside. So the upgrade reflects stronger ULIP performance, agility in the non-ULIP products, and margin stability. Citi anticipates a rebound in the net mutual fund flows by June 2025, with ULIP flows lagging. So the VNB multiple is raised to 17 times from 12x, factoring in a nearly 10.5% decadal VNB CAGR, up nearly 400 basis points. So despite a nearly 50% derating since September 2024, due to volatile margins and ULIP slowdown, the stock trades at a nearly 40% discount to peers like HDFC Life and Max Financial Services, offering significant comfort. So preferred picks remain HDFC Life and SBI Life. The Adani Group has emerged as the top bidder for Jaiprakash Associate under insolvency proceedings, with an offer nearing 14,000 crore rupees. This offer reportedly includes about 11,000 crore rupees in the upfront payment. So Dalmia Bharat is the second highest bidder, offering 11,000 crore rupees. Both the major contenders are primarily interested in acquiring Jaiprakash Associates' cement businesses. Jaiprakash Associate currently operates 4 cement plants in Uttar Pradesh and Madhya Pradesh, along with 12 leased limestone mines in Madhya Pradesh, boasting a total cement capacity of 5.6 million metric tons per annum. SEBI is planning a major nationwide investor education campaign, with whole-time member Kamlesh Varshni confirming it's the regulator's next big mission. So a detailed plan is being developed with state governments and other partners to take investor education to the next level. A top priority for SEBI Chairman Tuhin Kanta Pandey, this coordinated effort will involve various ministries and agencies rolling out across different platforms and regions. Sigachi Industries confirmed that 39 team members died in the recent explosion at its Telangana Pharma factory, a slight revision from the earlier reported 40 deaths. So out of 33 injured employees, 12 have been discharged, and the company has provided 1 lakh rupees as interim relief to each of them. So Sigachi Industries also stated that it will offer full medical and rehabilitation support to all the injured employees. In a landmark move, Haryana Chief Minister Nayab Singh Saini has announced plans for India's first Disneyland-style theme park in Manesar, just outside Delhi. So the ambitious 500-acre project, strategically located along major transport corridors, aims to put the national capital region on par with global entertainment hubs like the Paris and Tokyo. So Saini describes it as a game changer for Haryana's economy, expected to create thousands of jobs and boost various sectors. India's Deputy Chief of Army Staff, Lieutenant General Rahul R. Singh, revealed that China and Turkey supported Pakistan during Operation Sindoor. So India's May 2025 strikes on terror camps in Pakistan and POK. Speaking at the FICCI event, Lieutenant General provided live updates to Pakistan. They said that China provided live updates to Pakistan during DGMO talks, with 81% of Pakistan's military hardware being Chinese made. So Turkey also played a key role. Prime Minister Narendra Modi recently shared a unique cultural experience from his visit to Trinidad and Tobago. dinner hosted by PM Kamla Prasad, where food was served on a sohari leaf. So PM Modi noted on X that this leaf holds great cultural significance for the people of Trinidad and Tobago, especially those with Indian heritage. Earlier in his visit, PM Modi also presented a replica of the Ayodhya of Ram Mandir to Prime Minister of Trinidad and Tobago, along with holy water from the Saryu River from the Mahakumbh 2025 in Prayagraj. A public interest litigation has been filed in the Bombay High Court demanding action against luxury brand Prada. The PIL seeks monetary compensation for artisans who make Kolhapuri chappals, alleging the brand infringed on their traditional craft. So the petition further asked government bodies to form producer associations and create policies for quick intervention against international violations of geographical indication rights like those protecting Kolhapuri chappals. Kalanidhi Maran and KL Airways have taken their long-standing legal battle with SpiceJet to the Supreme Court. So they appealed against the Delhi High Court's May order, which had rejected their claim for 1,323 crore rupees in damages from the budget airline. So the top court has agreed to hear their pleas on July 18. So this move comes after both the arbitral tribunal and the Delhi High Court previously dismissed Maran's assertions in the share transfer dispute, providing a temporary relief to SpiceJet. Himachal Pradesh is grappling with devastating monsoon rains, claiming 63 lives and leaving dozens missing since June 20th. Cloudbursts, flash floods and landslides have caused over 400 crore rupees in damages, with Mandi districts hit the hardest. So over 250 roads are blocked and essential services like power and water are disrupted. The Indian Meteorological Department has issued a heavy rain alert until July 7, warning of more landslides. Rescue operations are underway with the Indian Air Force airdropping aid. Authorities estimate actual losses may be higher as relief efforts intensify to restore normalcy in the state. President Trump's Big Beautiful Bill passed the House, securing $4.5 trillion in tax cuts and boosting defense and border security spending. So the legislation extends 2017 tax cuts, adds deductions for tips in overtime, and slashes corporate tax burdens, potentially increasing after-tax profits for businesses. However, it raises concerns about the long-term deficits projected to rise by $3.4 trillion over a decade. US President Trump's 90-day global tariff pause ends July 9 with no extension. Starting tomorrow, he'll send letters to countries setting 20 to 30% tariffs for US business. So Trump says that this simplifies trade deals targeting over 170 countries. India and the United States are on the verge of finalizing an interim trade deal within the next 48 hours as negotiations intensify in Washington. Led by India's Special Secretary Rajesh Agarwal, the talks aim to avoid a 26% US tariff set to resume on July 9. So India is pushing for tariff cuts on the labor-intensive exports like textiles and footwear, while resisting US demands for access to its agriculture and dairy sectors. So the deal could boost bilateral trade towards a $500 billion goal by 2030, but unresolved issues remain critical. Well, with that, viewers, it's a wrap on Market Express, but don't go anywhere because Sanjana Chauhan is coming up with Profit 360 on the other side of the break with all the national and international updates. So stay tuned to NDTV Profit.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like, no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores.
And small cap indices outperformed the benchmarks as both Nifty and Sensex reversed their 2-week gaining streak. Nifty Financial Services, Bank, FMCG, Auto snaps its 2-week gaining streak, while Nifty Pharma and PSU Bank gains more than 2% for the week. The SEBI bars Jane Street Group entities from accessing the Indian securities market and directs the impounding of over 4,000 crore in alleged unlawful gains from the group. Jane Street disputes the findings. Hours after barring Jane Street from accessing Indian markets, SEBI says it takes action whenever it detects violations and enforces its orders based on merit without bias and in proportion to the violations identified. SEBI plans a major nationwide investor education campaign, says the regulator's whole-time member Kamlesh Varshne in an exclusive conversation with NDTV Profit. He confirms investor awareness will be the regulator's next big mission, and a detailed plan is being developed in partnership with state governments. Sources say nearly a 14,000 crore rupee offer by Adani Group has topped the list of 5 potential bidders for Jayaprakash Associates Limited under the insolvency proceedings. With an interim trade deal between India and the United States imminent, US President Donald Trump says his administration will start sending out letters to trading partners this evening, setting unilateral tariff rates, which he says countries would have to begin paying on 1st of August. The Supreme Court declines to hear a plea by HDFC Bank CEO and Managing Director Sashidhar Jagdishan, challenging an FIR filed against him for cheating and fraud. The families of the victims of Air India plane crash in Ahmedabad accused the airline of forcing them to make financial disclosures under the threat of receiving no advance compensation, even as the carrier categorically rejects the allegations. TVK announces that actor Vijay will be the party's CM candidate for the 2026 elections and will go at it solo, as there would be no alliance with the BJP and DMK. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. Thank God it's Friday and the markets are closing the week on a very positive note. After 2 days of declines, both the Nifty and Sensex bounced back, ending higher today and breaking their short-term losing streak. However, this uptick wasn't enough to prevent the indices from snapping a 2-week winning run. But for more, let me quickly go over to my colleague Harsh for a detailed wrap of the week's market action. Harsh, over to you.
Well, the hallmark for the day was the Nifty closed at the day's high, and it was led largely by a sharp up move in the last hour or so of trade, where we went from very close to the day's low, or maybe around 50 points away from the day's low, to the day's high. So that really stood out for me. In terms of what led to that move, it was the Nifty Bank which drove that move higher. A couple of stocks which were in focus: a Bajaj Finance, top gainer on the Nifty; a Trent, the top loser, 11% lower on the back of the quarterly update, plus the AGM takeaways and how brokerages construed those. Now, when you're looking at the overall breadth on the Nifty, it was fairly positive. There was a hint of positive bias on that breadth. When you're looking at broader markets, in contrast, there was an underperformance versus the Nifty, at least in trade today. So that was how both the mid-cap and small-cap indices closed, absolutely flat. We didn't see a sharp spike. It was a range-bound day of trade on the Nifty as well as on broader markets. And that's largely been the theme this week as well. It's been market consolidation. Let me talk about one sector which stood out through the week. It was the Nifty Pharma. 7 straight days of gains on the Nifty Pharma. Continues to stay in the green today as well. What didn't do well was autos and metals. Those, if at all, auto actually. 0.1% lower, really nothing much to talk about, but metals was the one pain point in trade today. But what did well, and plenty of sectors, but energy and defense were the two that really stood out for me. Both of those 1% higher, nearly 1% higher in trade. So those were two sectors which really stood out. Again, it's a week where we've seen a bit of consolidation, and of course we'll have to wait and watch for Monday as to how the markets react now, because we've had a decent-ish few trading sessions where the markets have been in consolidation mode.
Right, Harsh, thanks so much for that. Meanwhile, Trent Limited shares closed down almost 12% after brokerage Nuvama downgraded the stock from buy to hold and slashed its revenue growth estimates for FY26 and 27. My colleague Mahima Vajrajani joins us with more on why the stock saw a downside. Mahima, over to you.
So I think I'll start with the business update first. Trent came out with its business update today, and they've shown a growth of 20% in the revenue, which was guided at 25%. I think that is something that the street is not liking. Plus, if you check the past 5-year CAGR of revenue growth for Trent, it's been around 35%. So coming at 20% is something that the street is not liking. Plus, they've added only 1 West Side store and 11 Zudio stores this quarter versus their guidance of 250 stores for a year. So I think that has also kind of slowed down. The store portfolio, of course, now includes 248 West Side stores and 766 Zudio stores and 29 other lifestyle stores. This also includes 2 stores in the UAE. Now, in terms of the other update, that's with regards to their AGM yesterday, the key takeaways from the AGM includes that Star Bazaar could become bigger than Westside and Zudio is something that they've said. Big Basket is relatively more expensive, and there is no plans to merge the Star Quick business and Big Bazaar is what they're saying. Companies on track to achieve the 10x growth target by FY30. They've already doubled in the past 2 odd years. Trent also plans to add 250 plus stores in formats, different formats combined in FY26, and core fashion business is expected to see a growth of around 25 to 30% in FY26 is what the management has reiterated in terms of guidance. Now, what brokerages are penciling in? Nuvama Note today downgraded Trent to hold with a revised target price of 5884, which was earlier at 6627. So significant downgrade there in terms of pricing as well. They're disappointed with the near-term growth expectations in core fashion. They've cut their revenue estimates also by 5 and 6% respectively for FY26 and 27. They're saying pickup in Zudio, beauty and star business can become the next big growth drivers for Trent. Macquarie on the other side has maintained outperform with a target price of 7,200. What they're saying is that Q1 is exceptional, and because of a one-off, because of weakness in terms of rains, as well as the entire geopolitical India-Pakistan conflict, and that it will bounce back in Q2. So this is the overall view as to how and why Trent is seeing such a downtick in trade today.
Thanks, Mahima, for that. And now our top focus this evening. In one of its biggest crackdowns on a foreign player, market regulator SEBI has barred a US-based trading giant called Jane Street from the Indian markets. Jane Street, which is a quantitative trading firm, is now prohibited from buying, selling or dealing in securities either directly or indirectly. And to top it all off, SEBI has also directed the impounding of a whopping 4,843 crore rupees in alleged unlawful gains from the group. Let me quickly go across now to my colleague Sajid to understand all of the important details of this extremely crucial crackdown.
There are 3 trading strategies, and in the first stage, what Jane Street did was to buy large amounts of Bank Nifty stocks in cash and futures market via open market there. In the simultaneously, what it did was sell Nifty Bank via index options in the market. So what basically it did in layman's term is basically while it was buying shares in the cash and the futures, it was buying cheap puts, which basically means the premium on the puts were very low, and it was selling expensive calls. Now in the second stage, when it happened, and all this is happening during the expiry day, so in the afternoon of the same expiry day, it was reversing its position. So while at the beginning of it, it was selling stocks and futures, it was buying back those stocks and futures, and as a result of that, there was an impact on the Bank Nifty's options. So the options also start changing their premium. In that sense, while it was buying cheap puts, in the afternoon the put becomes expensive, and the calls become cheap, and they square off the positions and they gain on the premium differential which is there, as a result of which you make supernormal profits in the market. The second strategy was basically with respect to selling large amount of stock futures, especially Bank Nifty futures and stocks which are aligned to Bank Nifty. Remember, most of the manipulation which was happening was in the Bank Nifty because of the kind of constituents which were there. 3 to 4 stocks were constituting nearly 75% of the index weight, and if you are able to manipulate 3 to 5 three stocks, you are basically manipulating the entire index, how it moves towards positive or negative towards the end of the market trade which is there. So short position on Nifty, Bank Nifty options at close led to better profits for them at the end of the closing of the expiry there. And the third one was with respect to Nifty, where they took large constituents which had high weightage in the Nifty, and they bought those constituents during the day, and at the end of it, the Nifty long positions were Nifty index options at close helped them to gain some profits at the end of the expiry day. Now, we are talking of just 21 days here. This entire transaction, what SEBI has done is from Jan 1st, 2023 to March 31st, 2025, and the entire detailed investigation is underway. But what we know is that in the 21 days, they had an unlawful gain of over 4,843 crores. And if you look overall, what they gained was in that period gains of nearly 44,358 crores in index options. In stock futures, they had losses of 7,208 crores. In index futures, they had losses of 191 crores, and in cash market, they had losses of nearly 288 crores. The strategy involved making profits from the options at the cost of their counter in the futures and cash market positions there. And overall profits for them stood at nearly 36,671 crores in that period.
And to give you an exclusive voice and the first reaction from the market regulator on the Jane Street case, we spoke with SEBI's whole-time member Kamlesh Chandra Varshney, and he told us that the market watchdog will take appropriate action whenever these violations are proven. Let's listen into that.
The Jane Street order came today, and it is quite a shocking order with a big quantum. What is the regulator's stance against something that is so big in quantum, especially in terms of manipulation of Indian markets from a foreign player or entities like that?
So as we say always that we don't generally react on individual cases, but as a general, as I have said earlier, whenever SEBI sees violation taking place, we enter the picture. We try to correct the violation, we take enforcement action, but all our enforcement actions are without any bias, completely on merit and proportionate. So we make it a point that all of our enforcement actions fulfill these three criteria, completely on merit, without any bias, and proportionate. So I think with this I will leave it over there, and it is for all others to judge.
Now, the SEBI is also gearing up for a massive nationwide investor education initiative. SEBI's whole-time member Kamlesh Varshney has confirmed that boosting investor awareness will be the regulator's next big mission. Let's listen in to that exclusive conversation that he had with my colleague Charu.
I think investor awareness is ultimate, tool to address this problem of influencer or all the violations that are happening in security market, because all the violations are directed towards retail investors, trying to make them do certain things which are not in their interest. So best way to avoid it is to go to those retail investors, go to prospective investors and educate them, make them aware. So this chairman has taken investor awareness and education program very seriously, and he has said that very clearly in a meeting with us, with market intermediaries, that this is going to be the next big thing in SEBI, and plans are already in place. We are going to collaborate with the state government, we are going to collaborate with government agencies, and all MIIs together. A plan is being formed how to take investor education program at next level. So that is the next big thing which is going to happen in SEBI.
Now, the Adani Group has emerged as the lead bidder for the debt-laden Jaiprakash Associates Limited, currently undergoing insolvency proceedings. Sources indicate Adani has submitted the highest bid to acquire JAL, whose creditor claims to exceed 57,000 crore. Here's Vishwanath with all the details.
Right, so what's happening with Jaiprakash Associates insolvency proceedings is that Adani Group, with its 14,000 crore bid, is likely the lead bidder for this company. The second highest bidder is Dalmia Bharat with 11,000 crore bid. Now, in Adani Group's 14,000 crore, there is 11,000 crore upfront payment that is being promised to the creditors. The creditors are going to look through all of the offers that are there on the table. There are three other bidders who are also in the race. Once they have gone through those details. They will negotiate with the lead bidders, the lead two here, Adani as well as Dalmia. What our sources are telling us is that much of the interest from both these groups is coming in because of the cement assets that Jaiprakash Associates owns, currently about 5.6 million ton per annum. That kind of a cement asset is available on Jaiprakash Associates, and that is why Adani Group as well as the Dalmia Group are competing for this asset.
Now, Zee Entertainment's management is defending its proposed 2,237 crore fundraising plan amid strong opposition from proxy advisory firms who have urged stakeholders to vote against the move. Now, the company plans to raise the funds by issuing fully convertible warrants to promoter group entities, Atlas Technologies and Sunbright Mauritius Investments at 132 rupees per warrant. This is the information that we brought you last evening. But now, if this is approved, this would increase the promoter group's stake from 3.99% to 18.39%. Proxy advisory firms have flagged concerns about excessive dilution of minority stakeholders, the lack of detailed disclosures on how the funds will be used, and governance issues tied to the timing and process of board appointments. In response, Zee's management has argued that the infusion will stabilize operations, support digital and content growth, and provide a long-term anchor investor, reinforcing the company's financial foundation after the failed Sony merger. And now let's shift focus to one of the biggest international stories. President Donald Trump is all set to fire off letters to countries with tariff rates they'll face to sell in the US market. This comes as India and US are on the verge of a big trade deal, racing against a July 9th deadline to dodge a 26% tariff hike. India is pushing for better access for its labor-intensive goods, while Trump wants barriers slashed on US farm products like corn and dairy. Talks are intense, with India's team extending their stay in Washington. Now remember, all of this time, Trump hasn't even winced, not even a bit. He has time and again emphasized that he'd rather send tariff letters than negotiate forever. With only Britain and Vietnam sealing deals so far, this high-stakes business deal could reshape global trade. Let's now get you Trump's remark on the tariff letters that will be issued to countries starting this evening. He said that the tariffs will range from 60 to 70% and from 10 to 20%. Let's listen in.
So we're going to start sending letters out to various countries starting tomorrow. We'll probably have 10 or 12 go out tomorrow. And over the next few days, I think by the 9th, they'll be fully covered. And they'll range in value from maybe 60 or 70% tariffs to 10 and 20% tariffs. But they're going to be starting to go out sometime tomorrow. We've done the final form, and it's basically going to explain what the countries are going to be paying in tariffs. And it's very important. It's a lot of money for the country, but we're giving them a bargain.
And now let's also get you the views of some experts on this trade deal. Starting with Sonal Verma of Nomura, she says if US tariffs on India are lowered to 10% from 26%, this could give an advantage to India in sectors like textiles, electronics, and other manufactured exports like toys and footwear. Trent Nugent of Natixis reckons that while no country may enjoy rates less than 10%, India may still have tariffs lower than China. Let's listen in to both.
If India can get its reciprocal tariff rate, let's say closer to 10%, which is the universal baseline, then the tariff gap between India, Vietnam, and maybe some of the other competitor countries will favor India. And for product categories where we compete with Vietnam, things like textiles, electronics, footwear, potential area being toys as well in the future. For those potential areas, we could get some tariff advantage, because the idea here really is to increase our export market share in these product segments.
Guys?
Announced by both governments. It's not very clear how that will come out, particularly on the agriculture front, because as you know, the US for the Vietnam one is very important because it says that Vietnam opened itself wide for the US, while for India, it's going to be very difficult to open itself wide for the US, given the fact that our culture is an important vote bank and employment. But I do think that for India, it will come and the tariff rates will be higher than what it had, but at the same time, it will allow for India to still be very competitive vis-a-vis China. But it's not going to be a free lunch in terms of being able to export to the US. It means that it's going to rely on India to actively make sure that there's no transshipment with China.
Moving on, NDTV's Vishnu Som decodes what this rather startling speech by the Deputy Army Chief was all about and the implications of this. But before that, let's listen in to this reaction that came in.
So few lessons that I thought I must flag as far as Operation Sindoor is concerned. Firstly, one border, two adversaries. So we saw Pakistan one side, but adversaries were two, and if I would say actually four or three actually. So Pakistan was the front face. We had China providing all possible support, and it's no surprise because if you were to look at statistics, in the last 5 years, 81% of the military hardware that Pakistan is getting is all Chinese, 81% of that. So it's no surprise. And China, of course, the good old dictum, killed by a borrowed knife, 36 stratagems that China talks about, killed by a borrowed knife. So he would rather use the neighbor to cause pain than getting involved in the mud slinging match on the northern border. So that is what he's seen. And another thing that China perhaps has seen is that he's able to test his weapons against, say, various other weapon systems that are there. It's like a live lab which is available to him. So it's a good, that is what is something we have to be very, very cognizant about. Again, Turkey also played a very important role in providing the type of support that was there. Bayraktar, of course, he's been giving from before. We saw numerous other drones also coming in, landing in the face of war, during the war, along with trained sort of individuals who were there. The next important lesson is the importance of C4 ISR and civil military fusion. There is a lot to be done as far as this domain is concerned. When the DGMO level talks were going on, Pakistan actually was mentioning that we know that your such and such important sort of vector is primed and it is ready for action. I would request you to perhaps, pull it back. So he was getting live inputs as far as from China.
And in a major setback for HDFC Bank's CEO Shashidhar Jagdishan, the Supreme Court declined to intervene and halt a police investigation against him. The court directed him to continue his legal battle before the Bombay High Court, which is already hearing the case. For more on this development, NDTV's Nupur Dogra joining us on the phone line with all of the details. Nupur, take us through exactly what the Supreme Court said while declining the plea of Shashidhar Jagdishan for the Leelavati Trust FIR against him.
Well, the HDFC CEO had in fact moved the top court saying that he has been seeking quashing of the proceedings against him in this case in the Bombay High Court, but there have been multiple recusals by the judges of the Bombay High Court, and citing this delay, he had approached the top court. Top court today noted that now Bombay High Court has listed the matter for hearing on 14th of July, and taking note of the same, the top court said that he should first complete his proceedings in the High Court, and after that, if he needs, he can approach the Supreme Court. However, in a relief, sort of a relief to the CEO, the top court bench today observed in its order that we sympathize that quash proceedings that were initiated in June have taken so long just because bench after bench from the Bombay High Court has been recusing itself from hearing the case. And the top court has further observed that it hopes that the Bombay High Court would take up the hearing on 14th of July. So it is sort of a relief also for him that now that the Supreme Court has made this observation in the court, he will for sure get a hearing on 14th of July in the Bombay High Court.
Right, Nupur, thanks so much for bringing us those updates. We'll continue tracking the story and bring you all of the details. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Hello and welcome. Thanks for tuning in to KYC. I'm Harsh Saita. With me is Anushi Vakharia, and we're going to be speaking power today. We've covered a couple of themes on power. We've done power grid for KYC. We've tried to understand how transmission will work. But you know, one of the other cogs within the transmission system and setup is of course transformers, and that's one of the key pieces within that transmission ecosystem. And today we'll talk a little bit about that space. Transrail Lighting is what we're going to be doing a KYC on today. And here's what I really want to know. One, I want to know how confident they are about execution. They have large projects, Anushi. Their book to bill is nearly 3 times, if I recall right. And therefore, is there a regulatory risk in terms of execution? Because you could see a delay in project both approvals as well as project execution from the vendor or the customer side of things, and therefore is that at all a risk is what I want to understand. Second, is there a people risk, because they've grown so quickly, so fast, and they're taking projects both on the transmission side as well, and now they're also getting into railways. So whether they have the capability, skill set, whether they're beefing up that skill set within the entity to make sure that they are capable of executing all that they are taking up. So that's the first thing. Second, how much of their top line is government linked? 55% is domestic, but how much of this is government linked, and therefore how dependent are they with regard to where the Indian government is concerned, and the ripple effect of that with regard to cash flow? If we quickly go to the next one. Yes, so delays in cash flow materialization and the like. Also, there's a large short-term debt repayment which has built up over the last couple of financial years. I want to understand what that is. It's of course a good thing because it's a payable, so your payables have gone up. Whether that is sustainable, whether that's immediately payable, and the company has decent cash flow to kind of take care of that, or rather cash flow as well as cash balances to take care of that. But nonetheless, it's something that I want to understand better. Also, diversification on top line. They're doing this, Anushi, in a big fashion. How big are they willing to go on that? Will 90% plus still be the traditional revenue that they make from traditional sources is what I'd want to know. And what are the margins there? Will they dilute margins in any fashion from that 12%? At least the guidance doesn't seem to suggest so. Right. But how does that play out? Also, order book and growth runway. We all know that the opportunity is massive in this space, both in railways as well as, and more so in transmission. With that kind of opportunity, around 10 lakh crore is what I read is the opportunity over the next 10 years. That's huge, and a lot of that could come to players like this because there aren't too many. And therefore, how is pricing and realization playing out at this point? Pricing has gone up substantially, realizations have gone up, and therefore you're seeing margins go up. But is that sustainable is the question, because are too many people building out from within is the other piece that I'd want to understand, and how do pricing and realizations go? Sorry, you want to add to something?
Yeah, just in terms of the last point, the company did emphasize that it's the pricing which will continue to remain in focus, because even their order book, the way they bid, will be dependent on the factor in terms of where the margins are concerned. So that is something that we need to keep a track of on what the inflow growth is going to be for the future as well. Right?
Perfect. Yeah. But what I'm going to do is I'm going to hand it over to you for explaining what the company is about. So.
Okay, so we'll start off with the biggest business, the biggest vertical that the company has. Firstly, the company was incorporated in 1984, and it's a traditional power T&D EPC company. That is what we are looking at. That's engineering, procurement and construction company. Now, it mainly focuses on the power transmission and distribution business. 93% of its revenue, or rather its order book coming from this project, from this vertical is what we are looking at. What exactly does this power transmission distribution consist of? It consists of galvanized steel structures for power transmission, along with the distribution that is there. It includes all the steps that we're looking at, which includes manufacturing, testing, installation and supply as well of these galvanized steel structures. So that is one vertical that we are pointing out towards. But Harsh, we also spoke about the railway. Railway is an opportunity that we should be watching out for.
Yes.
And in that, signaling is something that they do. So this is an interesting area that we are seeing. Around 5% of their order book stemming from this vertical is what we are seeing. It includes the likes of electrification, earthwork and telecommunication projects as well. So interesting one to watch out for, right?
Yes, absolutely. So then now they're also getting into civil construction projects. it's a very small component of the
Yeah.
business, very frankly, but nonetheless, there is some amount of that which is playing out. You've got bridges, tunnels, elevated roads and other civil infrastructure projects as well that they are taking up. But I'd be keen to know as to whether how much of that component are they willing to take up, and at what exact margin would they be willing to take some of these projects up at, because that's the more relevant part of it. Then there's poles, lighting and projects which include high masts, it includes street poles, luminaries, power transmission and distribution monopoles, and in all of this it primarily operates in the Indian market. Some of this is already seen on your screen, so this is broadly what they also try to work around, and there's a very large market for it because there's just so much so many highways that are being built where some of this electrification is needed. So all of that is necessary. But you want to take us through the order book segment?
So as the the first vertical that we talked about was the power T&D that continues to dominate the overall pie that we are looking at. 93% is the pie that we are seeing of the order book breakup which is there currently. Railways on the next side we are seeing about 5% of mix from there. Is there a shift in terms of where the percentage is concerned in mix of these verticals is something that we should be quizzing the management for. Civil and poles and lighting comparatively smaller mix that we are looking at around 1.8% and 1.2% is the kind of size that we are seeing, right?
Yeah, and then you've got geography, 55-45 domestic to international.
Yeah.
Now international has its set of risk because there's just so many geopolitical factors which are playing out at this point. There's also tariffs. How much of some of these moving parts impact the business is what we'd want to understand. Also Forex, because now you're suddenly Forex dependent. So so some of those, we'll of course speak with Mr. Bagde and understand better as to what this company is all about. But let's quickly first break down the metrics as we always do on each segment of KYC. Let's quickly look at what metrics we'll look at. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage, valuations and outlook. We'll cover all of that. Street coverage is limited. Mind you, it's a newly listed company as well. So you want to keep your eye out on that. But very quickly, Anushi, as always, income statement.
Right, so it's a recently listed company is what we are looking at. It got listed in December 24. If you are taking the last 3 years in consideration, it's a consistent kind of a growth story that we are looking at in terms of where the revenue is concerned. 31% is the 3-year CAGR growth that we are seeing with FY25-24 also recording those strong set of numbers that we are looking at. But it's the EBITDA and the PAT CAGR wherein we are looking at a higher number in terms of where the growth metric is concerned, 49% of our EBITDA CAGR, while for net profit we are looking at a 72% of a CAGR. Do note that margins also have seen a shift from 9% in FY23-24 to 25, we are seeing 13% of a range. While the management has guided for a 12 to 12.5% of a range continuing, the question would be whether they can scale back to the 15% that was there a couple of years ago. That is something that we should be watching out for. But it's the order book also which is interesting in the company. Now, if you are seeing the book to bill ratio overall, it has remained in the range of 2 times to 3 times in the last 3 years or so. 14,551 crore is the FY25 order book that we are looking at. This is an uptick of a 44% compared to FY24 number that we are looking at, and this included order inflows of 9,680 crore, which is a 120% of a jump in itself. Do note that the company also had an additional L1 position of 1,364. In FY26 also they've declared some of these other key order wins. So it's the current status of the order book is something that we should be updating the viewers with, right?
Absolutely. And so while the income statement is very, very impressive, here's why I don't find the balance sheet as impressive. You look at the equity, the reserves, that's all okay. No worries there. The book value also at around 1,800 odd crore, 1,900 odd crore. It's trading at 5 times book, by the way, just for information. No comments on that. Borrowing. And look at that number, 640 crore. Out of this number, it's actually essentially 600 plus crore is short-term borrowing. That's where a likely possible concern is. But they have enough cash and bank balance to fund that borrowing. So again, in that sense, it's not as big a concern. And therefore, we've given this a neutral. But I want to understand where this number goes in terms of the borrowing number. See, if it's a payable number, and likely it is, it's not that big a worry. But at the same time, I'd want to understand whether that number is sustainable or not, because working capital requirements have inched up sharply. The IPO was done for the purpose of meeting working capital requirements, and therefore I'd want to know as to how the working capital cycle plays out. The receivables too are quite substantial on the balance sheet. In fact, let me quickly highlight that. Inventory of around 500 crore, receivables of around 1300 crore. Now, is this government related projects, which is why this has ballooned, or how does it play out? And that has clearly played out on the cash flow as well, right? So neutral on the balance sheet, but cash flow, Anushi.
Yeah, cash flows also, I just wanted to emphasize on the same point that you were trying to make. It's while cash flows, we did see that 35 crore was the figure in FY24, 25 it moved to 287 crore, but it's the receivables which is a question over here. We've seen an uptick in terms of where the receivables and both inventory levels are concerned. Along with that, even payables is something that I want to question the management with. Why is there an increase in terms of the payables? So that's why we've given this a neutral rating on basis of their net cash flows. If we see, they are 32 crore as compared to a negative figure of last year. So that's the outlook on cash flows that we're building.
Well, on a side note, it's very interesting to see how each metric of the financials tie in with each other.
Yeah.
And at the end of it, they give us a great output. So for those really understanding financials, this is a great way to understand it. Anyway, let's quickly go ahead. Return ratios. When you're looking at the return ratios, there's been a steady inch up. The ROCE numbers are currently at 25% plus, in fact. So strong ROCE that the company has clocked. And despite this burgeoning working capital requirement, the ROCE number seems to be holding quite steady. So that's a big thumbs up, at least from our side. But shareholding, Anushi.
So in terms of where shareholding is concerned, now if you are looking at the promoter stake, 71%, and it's not a so I just want to, while we are giving this a thumbs up, just want to emphasize on the point that we still do not have that much of a history for the company. So we just have 2 quarters of data since it's a current listing. So promoters continue to hold 71% of a stake in the companies. While if we look at DIIs, they hold about 14 to 15% of a stake. While FIIs, minimal kind of a participation that we are seeing about 0.6% at the end of March 25, while public has about 14% of a stake. So we've given it a thumbs up on the basis of promoter holding and the DIs. Yeah?
Absolutely, yes. And also the fact that the promoters have left enough money on the table for investors, and that comes to street cred, right? It gives us a good perspective that promoters holding 71% is quite good. Whether the promoter dilution happens or not, we'll have to wait and watch, and we'll probably quiz management on that risk as well. But look at the way in which the stock has performed. Very few IPOs since last year have done what you're seeing on your screen, and therefore that's creditable that they've left good money and value for investors, at least the way we see it as of today. So that caveat in mind. You want to take up valuations and outlook?
Absolutely. So valuations remain attractive for the company. If you are seeing again now in terms of Transrail, if you look at the forward multiple, 22 times is the kind of multiple that we are looking at. This is in comparison with KEC and Kalpataru trading at similar levels. So basis on that, we have given it a neutral so far, but it's not something that we should be complaining about, right? Because it is on the attractive side that we are seeing. Skipper on on the higher side of 32 times is the multiple that we are looking at, but considering we'll take more of these quarter performance in consideration to see how the valuations shape up, right?
Yes, absolutely. So we'll have to of course wait and watch as to how valuations shape up and whether this performance lasts, and we'll take views as well from the management. But let's look at the outlook. Neutral from an outlook perspective as well overall, and street cred as well is, or rather street coverage as well is quite good. There are 2 buy calls. Average upside is around 14%, including 1 note coming in from AMSEC today morning. So a decent upside as well, which is getting built in. But what I want to really know is the outlook. And they've reaffirmed their EBITDA margin guidance of around 12%. They're looking at a 20+% growth guidance as well. I want to understand whether how confident they are with regard to that. Board has approved a capex plan of around 200 crore, and there's going to be a sharp ramp up with regard to products, and you can see that on your screen. From 84,000 MTPA, there's a goal to touch 196,000 MTPA, and on the conductor front, it's from 24,000 kilometers, more than doubling up. So very, very strong guidance both on capex as well as on the order pipeline and the growth going forward. Let's quickly sum up the ratings therefore. and let's bring it on our screen. We'll start off with the income statement. No complaints there whatsoever. The balance sheet we spoke about along with the cash flow, if you recall, the return ratios are quite strong at 25% despite the working capital requirements. Shareholding is a thumbs up, 71% owned by the promoters. Street cred, very, very strong. Good listing gains as well. And thereafter too, the stock has performed very, very well. On a valuation, it's largely a fair valuation, which is currently trading at basis FY26. And the street coverage plus outlook is also a neutral. That gives it a very healthy 6 out of 8 and no thumbs down as well with regard to where a Transrail Lighting is. So that one stands out. But let's quickly bring on board the chairman of Transrail Lighting, Mr. Digambar Bagde, who's joining us. Welcome, Mr. Bagde. Great speaking with you. I want to first start off by understanding how is the environment evolving in terms of execution? Is there any concern whatsoever internally as well as externally from a customer perspective on execution? Or is this just a problem of you executing and you building up capacity and executing and delivering to your customer? Give us that perspective.
Good morning. Thank you for this call.
Wishing you a very good morning, sir.
So first of all, let me tell you that we at Transrail Lighting Limited are proud to be one of the leading EPC players in India with very strong domain expertise in the power T&D. And over the years now we have diversified into civil, railways and poles and lighting business. So actually our strongest point is that we have our own in-house design facility, testing facility, manufacturing units and execution capability. So this end-to-end capability gives us the greater control over quality, cost and the timelines. So we are able to complete. So I try to address your first question regarding execution internally. Since we are controlling almost 70% of our supplies ourselves, that gives us the confidence to the customer that we are able to supply all the goods on time. And construction is again under our control. And there is a scarcity of skilled laborers in the market, but we are very well experienced since last 40 years in executing various projects up to highest voltages. So we are not faced much difficulty so far in executing, and none of our projects have suffered on account of shortage of laborers.
Okay, Mr. Bagde, this is Anushi joining in as well. And now you did speak about the execution pattern of the company, but want to emphasize more on the order inflows picture going forward. Now, last year we did see about a 120% of a growth in terms of where the inflows were concerned. If you take this year into consideration, you've pointed out a 1 lakh crore of an opportunity from which you can see about a 8 to 10% of a share, which implies about a 10,000 crore of inflow size is what we are looking at. Just want to get your understanding. Is that the kind of number that we should expect for FY26, or are you expecting for a higher growth?
So we can expect slightly more than what we have acquired the new project last year, because there is a huge growth in the domestic as well as international market. You must have seen from the CRISIL reports, they are projecting a growth of 7 to 8% CAGR and $20 billion of investment into the transmission sector. And also there is a huge investment in the other non-T&D sector also. So therefore we find that there will be very good order inflow in the domestic, not only in the domestic, but from the international market also. So we don't anticipate any degrowth or any kind of problem in getting orders or maintain our growth projection, what we have projected over the years.
Would the domestic to international mix broadly remain 55-45, or would that change?
Yeah, actually it will remain the same, more or less. It will be 50-50%. Now the order inflow from the domestic market also has improved substantially as compared to 2 years before. And of course, and in international also we are growing into various more geographies, adding more countries. And I find there is a good order inflow pipeline coming from the international market also.
And so just on that front, if you can give us even a breakup in terms of how the margins differ in domestic as compared to international business, and some of the key areas in which countries are you seeing more of these orders coming in from on the international side?
So international projects are slightly better in terms of quality, because in terms of quality they are very good, because terms of payment, having a price variation, price protection towards the commodity rise, and also they are multilateral funding, so they are not depending on any utilities or the government decisions. So they are actually funded. We choose the projects only if they are multilaterally funded. So that is one part. And in India also, we don't find any kind of, now since the projects are coming regularly, there is an improvement in the margins now.
So with that in consideration, can you see the margins? You've guided for a 12 to 12.5% of a range currently, but in the next 2 to 3 years, can you see that going back to the 15% of levels? If you can give us more details on that.
No, 15% may not be possible, because that more and more competition is also evolving. So we will definitely try to maintain about this year, of course, we are given the guidance of about 12%. So I think that for next year also we can expect about 11.5 to 12% of EBITDA margins.
I want to understand when your fresh capacities go on stream, and does that mean that your capacity utilization will ramp up fairly quickly, or will it lag? Will capacity ramp up lag, or rather capacity utilization lag in some form or shape? Give us that color, because it'll help us understand growth visibility. That's where I'm coming from.
So we have seen that as the order book has grown, both in terms of T&D order book has grown. So therefore there was a need to expand the tower and conductor manufacturing capacity. So this will definitely help us not only to meet up our project requirements, but also ensure that the future growth requirement also will take care with this enhancement of the capacity.
Okay, so that's in terms of capacity. If you can just give us in broad view in the next 2 years, 3 years, once all these capacities, when is the peak kind of capacity utilizations that we can expect?
See, we had a capacity of 84,000 tons initially. And then when we increased it to about 125,000 tons, and we added a new factory, so that took us to about 175,000 tons. So that will take care of our existing order book. And for the future order, which we are expecting further growth, at least 20 to 25% growth, I can expect that about 22% growth in the next 5 years, next CAGR, 22% growth in the next 5 years. So therefore, we are actually keeping ourselves ready to meet up these challenges. And therefore, we have decided to enhance further capacity from 175,000 tons to 196,000 tons.
How quickly does that happen, sir? Date?
125,000 tons will be available by next 2 months' time. And we will reach up to 175,000 tons by March 26.
Excellent. And sir, what would your capacity utilization be at that time in terms of percentage?
As far as the March 26th is concerned, you can consider about 95% capacity.
Wow. Okay. Excellent. Okay, understood. And sir, with regard to cash flow, it's been chunky, right? Is it only because of government projects? And will that continue to be chunky? What should we expect?
See, as far as these Indian projects are concerned, they are mostly the projects which are tendered under TBCB route. So they are not dependent on any government funding. So they are depending upon the funding to be arranged by the TBCB, that is BOT players. So we have seen that during last 2 years, while executing these TBCB projects, we have not faced any delay in receiving the payments. Only thing in the domestic market, there are dependency payments, So you are getting the payments against supplies, part payment against supplies, and then balance payment against erections. And therefore, the holding period of 20% retention is more than the international projects. Therefore, it is you will find that there is slightly increase in the data's numbers.
And what about payables, sir? What's the status there? Because payables have also ballooned.
Payables are mostly these LC-backed players, payables, and we have actually planned it in such a way that the inflow and outflow matches. So therefore, we are opening the LCs and 180 days credit LCs, 120-day credit LCs. So therefore, you find that the numbers of payables are more, but they are actually matched with the collection cycle, so that there is no cash flow problem for the execution of the project.
Excellent. Sir, thank you so much for coming and speaking with us. This is indeed very, very insightful, both from an industry perspective as well as from a company perspective. But viewers, thank you so much for joining us. Completely out of time from Anushi, myself, everyone who puts this show together. Thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
You start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
Tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India.
In our house we call the buckets as Hawa, Pani, Dal Roti, Misthan and Chappan Bhog. Our grandmother's strategy of saving money in different containers.
You've called it the bucket approach to investing.
Does your income cover your expense? That's a stage one. While insurance companies can come and tell you 10 to 15 times the ideal cover, I'm not in an ideal scenario. So you'll progress from one stage to other and can revert back to the original. People where we are starting, on an average in Bombay, you'll get what? 3 lakhs, 4 lakhs start, engineer also gets that. So in case something goes wrong with you, are you expecting your family to let go of their lives? So in stage 3 and 4, it's critical not to be, I'm taking a word out of cricket parlance, Inzamamul Haq on crease, because he never wanted to run.
Think back to when you were 18 years old. Are you the same person you were then? And I don't mean that as a philosophical question. Chances are that depending on how much time has passed, your manner of thinking, your desires, and your ability to act on those desires has changed. So should the way that you plan your finances remain the same? The answer to that is pretty obvious. It can't. And that encompasses everything from your investment strategy to how much you spend on day-to-day expenses and things that you like. This is MoneyWise on NDTV Profit, and I'd like to talk to you about a strategy that can shift based on your stage in life. Joining me today is Sharad Tandon, founder of Invest at Ease.
Pleasure to be here.
Let me start by asking you about that. I find this fascinating. You've called it the bucket approach to investing. First, what is it? And then we'll delve deeper.
Okay, so bucket, if you can correlate to your own, say today you are wearing a suit, so there are multiple pockets.
Yeah.
You keep your money, cards in a different pocket for a prevention reason, which can be security, which can be some regular expense you do. Bucket approach is similar to or akin to that, or old time sakes, our grandmother's strategy of saving money in different containers.
Yeah.
So different goals, different containers, that's how the grandmother saved, mother saved. We keep in different pockets, that's how we spend. And bucket strategy is simply to align your end goals and how to create wealth to meet that goal's cost or expense for that goal. And that's how the bucket strategy works. There have been different models in the financial market or talked on that. People can classify you on age, risk appetite, your first generation or second generation in terms
wealth.
of professional.
Yeah. Also the wealth that you get handed down, right?
So it's a hand-me-down wealth if you have, then you're starting in a different bucket. So at 25, probably I can start in stage 1. If you have inherited some wealth, you can probably start at stage 4.
So, but then you mentioned these stages. What are these stages?
Okay, so simply to put in a human life. So let's start from the college days. So 18 to 20 years when you are in college, you'll probably do a graduation, post-graduation by 24, 25, unless until you are getting to a medicine, which will probably take longer to specialize.
Yeah.
Your earning capacity will start in today's world somewhere around in early 20s. So that is stage 1. Now, that is one way to look at it, age. But the way to look at it ideally is, does your income cover your expense? That's a stage 1. If not, you're in stage 1. Any income which is not covering your 100% expense or up to 100% expense, you are in stage 1.
So as an example of that, Sharad, just let's talk about a hypothetical scenario in Mumbai, right? You have a single earning member of a family. You have a rent in a place like Lower Parel or in Bandra or in some other place where it goes up to as much as £1 lakh a month, and that person is maybe earning about 1.5, 1.7, but they also have a child, they have that education, they have the monthly expenses, and so pretty much all of their income on a monthly basis is getting accumulated and spent on those expenses. If it's 0.8 to 1 in that ratio, which stage would you be in?
Okay, so for simple empirical thumb rule, look at it the way, if your income is closer to one time of your expense, you are in stage 1.
Okay.
1 to 3 times, you are in stage 2.
Okay.
3 to 5 is stage 3. 5 to 7 is stage 4. 7 plus is stage 5.
Right.
Now, and we have intensely, I'm talking in terms of creating it very simply, because today in today's world, if you talk to people, talk about 1 year, 3 year, 5 years, 7 year, 10 years SIPs.
Yeah.
So that's how the buckets will get formed. And so the case you are referring to, 1.5 lakhs is earning, 1 lakh is the expense. Rent plus, now you have not added kids' education.
Yes.
Household expense. So practically you are finishing everything.
Yes.
Now what is important for you at that point of time is to first create a sort of cushion or productive wall environment around you. So first thing to invest, look at a term plan. Because you have said single family member to earn, If something goes wrong, then family goes for a toss. Who will take care of them? So you need to guard for that. But challenge is, you want to invest, take insurance, there is no money. So while insurance companies can come and tell you 10 to 15 times the ideal cover, I'm not in an ideal scenario.
Right.
So my suggestion to people is, start with 3 to 4 times of your annual CTC. In this case,
in stage 1.
Is stage 1. So in this case, you are talking 1.5 lakhs, monthly 18 lakhs earnings. So around, say, take around 50 to 75 lakhs of term plan. Which
but,
at that...
But sorry, I want to stop you there, because my intention of talking about 1.5 lakhs is not ordinarily someone who's stage 1. I would talk about them based on what I saw of the table that you drew, is someone who might just be in stage 2. But because their expenses are so high, they would be in stage 1. But okay, so before we get to this, I want to actually ask you to describe those stages, because I think the way that you crafted them, from a defense to a agility in stage 3 to a virasat in the final stage, as you pointed it out, is fascinating. How do you define that?
Okay, so I'll come to that. Just give me a second. On the question to your first question was, is stage 1 or 2? It's not a silos. It's a blurred line. It's a gradual. Life is shades of grey. So you will progress from one stage to other and can revert back to the original. So if you shift from Bombay to Bangalore, probably suddenly you will be in stage 2, or vice versa, you will become 1.
It's dynamic.
So it's a fluid situation. And the way to look at it, stage 1 is what we prefer to call in our home parlance is Hawa.
Okay.
And this I'm sharing on a lighter note is, in our house we call the buckets as Hawa, Pani, Dal Roti, Mishthan and Chappan Bhog.
Okay.
And you'll realize why we are doing that.
What is Chappan Bhog?
Chappan Bhog is like what today in Bombay you call Maharaja Bhog Thali.
Okay, so the whole, like the big
feast,
meal. The
King's feast.
Right.
So reason being calling the first stage as Hawa is, without that you can't sustain. So you need to meet your expenses, otherwise you will not be able to sustain for long. With water you can sustain for say 6 to 8, 10 days, then you will start weaning away. Now dal roti is a staple food which will stay for you longer to survive. And sometimes in life you want some additional desserts, in the English parlance, Mishthan. Now, but sometimes you want continental and Chinese and whatnot, or a mix of everything. Then you need a King's feast.
You need Chappan Bhog.
Chappan Bhog.
Okay.
So while we were talking this, and the best critics comes from house. So my wife and my son said, "What is this? Is old time sake?" No. So we can refine this. So that's where this new concept of DAWA, we yesterday created an acronym. And why we do acronyms is very simply, if you remember your college days, any tough topics you wanted to remember, you created an acronym.
So this is DAWA.
DAWA.
Okay.
DAWA is very simply, first stage is defense.
Okay.
So you create a portfolio to create a defensive wall around your family and ecosystem. Now, this is aligned to what duties you have. So that's how it is coming to. First A is where we call action. Activity. Now you got into stage 2, so instead of this example which you took 1.5 lakhs, probably you are earning 2.5 lakhs.
Okay.
So
it could be both of you together. It could be
family income we are talking about. So just keep in mind at a general level is, whenever you talk about expense or income, it is at a family level. So if there are double income family, no kids, dinks as they call it, or single income family, or multitudes of other options to come, rental income, dividend, whatever comes, total income minus total expense. And income also, just be cautious when we are referring to, we are talking net income taken home.
Not gross and not before taxes.
And please don't count variable, if you are in a job, as your income take home.
What do you call it?
So variable is a bucket which comes like a bonus in the old industrial units, which might happen, might not happen, depending how you perform.
You don't count on it.
So whenever you are planning for retirement or long-term investment plan, slightly be conservative in terms of the corpus you are looking to invest. Otherwise, you will get it on the wrong side. Now, stage 2 is very simple, which says action. Action what? So you've got a surplus. Now you probably have a term plan which is 3 to 4 times of your annual CTC. Look at expanding to, if you have not taken a step up term plan where the sum assured get increased to 5 to 7 times. Start investing aggressively and max out your SIPs.
Okay.
If your employer has not given you health insurance, probably look at some personal health insurance outside Ayushman. In the stage 1, you typically depend on Ayushman or employer's insurance to cover your expenses.
Because you simply don't have the
excess
income.
cash flow.
Right.
Now, third stage is agility.
Okay.
That is the second A of Dawa. Now, agility simply implies I am nimble-footed.
Okay.
And which again, against to what you refer to, ability to be flexible in terms of managing your portfolio. Because you've passed 2 stages, probably 7-8 years into your job, you've got to say 3 to 5 times of income, which is close to say 3 lakhs.
3 to 5 times of expenses.
Yeah. So 1 into 3 is 3.5 lakhs sort of income you are making, 36 odd lakhs. Pretty decent in today's world. Even in Bombay, the only choice is you might not end up living in Bandra and Parel, you might end up living in Borivali, Kandivali or even further off in MMR. So, but look at that in terms of what we do now. So we have taken care of protection, which is term plan. We have taken care of excess health insurance because cost of medicals has gone up. And we are maximizing our SIPs. Now, stage 1, stage 2, stage 3, suggestion is look at aggressive funds.
Okay.
Because you are doing for long term.
And you want the maximum amount of capital appreciation.
The compounding will happen over a period of time. We have discussed many times in multiple programs you have done.
Yeah.
So, now the fourth is what we call as Vayu, I call it in Hindi terms, or you can even call values. Lot of investment gurus will tell you to invest into stocks which are undervalued. You look at value in terms of which sector is not doing well. The idea behind all this is vast, this is long term.
Right.
But also comes with this, your ability to reassess, realign. In stage 3 and 4, that is very important. Because one of the biggest trends we are seeing today around us in the new Gen Z or Gen millennials, whatever you want to call them, post 2000 born, everyone wants to have financial independence and retire early.
Right.
Now, it comes with own pitfall and advantages. Now, you need to have ability after 7-8 years of job, of establishing your business, a startup, whatever you want to do, to be able to be nimble-footed to realign in case something is not working for you. And which can be as simple as you had planned for a kid, but God was kind enough to give you twins.
Right.
Your expenses can be high.
Got it. So we've discussed all of these life stages, but you said at the start, and I think that's an important point to make, is that this entire thing is fluid. It can change from an unexpected windfall and it can be set back because there is something that, a tragic occurrence or whatever else, a setback, right? So let's talk about the latter first. For whatever reason, and in places like Mumbai, in places like New Delhi, in few other places, even in Bengaluru for that matter, increasingly, the amount of expenses that young people have to deal with has already put them at stage 1, even when they should be in stage 2, for example. So how do they get past that? How do they change that lot in life?
Okay. So for stage 1, the critical operating factor is being frugal. Unless and until it is very essential, don't spend money to buy something. If you have to buy something, think twice, think thrice. You might ultimately feel, is it needed, not needed? That's step 1. And that's the only way to start creating a building blocks for the second stage. There is nothing beyond that. See, because you can't suddenly say, I will stop eating, say in Bangalore, sambar chawal or a dosa or idlis, or in Bombay, Bada Pav or Delhi, Chola Bhatura or Kachoris. You can't suddenly stop eating. And what will you reduce?
Yeah. Those are your bare minimum things that you do.
So sustainability you can't reduce. The only thing is, if you want to buy a probably iPhone new version, on which a lot of Indians have committed that crime, I say crime because you sell a version to buy another version and there is no feature differential. And the same job probably a Android phone also can do. For that is stage 1. It depends on how you define that. I want to buy a bike at stage 1 because my commutation is costing me too much. Probably look at 100cc instead of 350cc.
Sure.
So those sort of adjustment nuances will play out with the individual's life. It cannot be a sort of
one size fit all. It can't be a one size fit all. Okay. So, but when it comes to then expectations, how much of a part will that play? Because I'll tell you why I'm asking that. One, a lot of people who are between 25 and 35 at this stage have the benefit of having parents who have done quite a bit of hard work. And I'm sure that when you look at your son, you have created a certain amount of wealth that you will eventually pass a certain amount to him. So he has that security. A lot of people have that security, so they're not as worried about making ends meet. So automatically, do you think that they should consider themselves in a different stage and therefore they should save differently, or you don't count what you don't have?
No, they should. So I'll say, for example, you referred mine case.
Yes.
So I shifted to Bombay in 2005. So first generation of my family who shifted to a bigger town, working in a private sector, not having a place to stay, so it's rent out. And I did not come to Bombay because I wanted my wife and son to compromise on their living style. So we started staying in Dheri, which in that parlance was, a lot of people suggested go to Borivali, Kandivali, Thane, whatnot. But education for the kid was making sense and we stayed there. So for 15 years, I stayed in a rented flat.
Yeah.
And a lot of us still continue to do that.
Right.
Now those days are past. So if my son today, who's just joined a job around 10 months back, he should not consider himself into stage 1 because for his, say, post-graduation, for his staying in Bombay, that thing of essential item has been taken care of.
Yeah.
So he's typically starting in stage 2 or 2.5 sort of situation. If someone has passed inheritance, wealth, probably got a 3 crores, 4 crores, then he straight away starts in stage 4, 5.
Right.
Because simply, even in the worst case situation, if he is keeping into FDs in banks, 6-7% interest comes. If he keeps in a balance fund, 5 crores corpus, worst case situation, 8 to 10% return, so he's making 50 lakhs on his own, which a new job will not give.
Sure.
So he's starting at a level where probably a mid-level manager is already there.
Yeah. So you also mentioned, and I think this was just an example that you said, in the first 8 years of your working career, you should be in this stage or that stage. It depends on how much you're able to apportion in the early days and the circumstances that you just mentioned. If, for example, you get handed a lump sum, your dad or your mom says, look, hey, why don't you just start something and you invest something or whatever, or your business takes off. So a lot of things you can't imagine or you can't plan for. But in your opinion, in an ideal scenario, for a salaried individual going through life and the first few years being difficult, how do they move up the ranks?
Okay, so we are assuming 2 things. One is a salaried individual. Second is, it's a first generation in a bigger town. That's what we are assuming at this point of time. And a lot of, I don't want to say a word which is slightly on a debatable point, but even white-collared, lower-end sort of people where we are starting, on an average in Bombay, you'll get what? 3 lakhs, 4 lakhs start. Engineer also gets that. There is no way
per year.
You can't sustain. Okay, unless until you are sharing a flat, probably 3-4 of them putting together, then probably yes. My suggestion is, first is 6 to 8 months of their expense start accumulating into sort of as simple as recurring deposit or keep in a fixed deposit. Because you are in a lower tax bracket, taxation doesn't impact you much. Please create that cushion if things go wrong. And God forbid, in today's scenario, we are seeing every other
job
company
losses.
Retrenching. You are taken care and you can sustain in town to find alternate jobs.
So stage 1, the first thing you do is set up your emergency corpus.
Take a term plan if there are dependents. If there are no dependents. Because this also person, if you want to split, like peeling the onion, can be multiple personalities. So Sharad Tandon probably has no dependent. Alex has a dependent family members. Now, there is some family back in hometown which Alex is taking care of. So for that, Alex emergency corpus actually goes there.
Right.
So it will be
or the
different.
term plan, the nominees would be there.
So each of that portfolio creation needs to be custom built. That's my first suggestion.
Yeah.
And please take advice of whosoever is close by dependent.
Yeah.
In this scenario we are talking is 6 to 8 months bare minimum of your rent, your monthly expense need to be sort of emergency corpus cushion, whatever you want to call it. Second is start accumulating in the small cap category of funds.
Okay.
Whatever is left. Now today mutual funds can start as low as $500. You start micro SIP. If you don't want to do a micro SIP, you can just invest lump sum 500 whenever you have like a. I'll give you a class example. I don't know whether you remember that or not. And probably it was before you started career. SDFC Limited used to have a product known as recurring deposit, alternate to bank recurring deposit, $500.
Okay.
So I started in 96 on that.
Oh, HDFC Limited you're saying?
Yeah,
okay.
limited.
Before
not
the
bank.
merger, right.
Okay. So it's as simple. Those corpus stays. I used to run my own SIP in my first fund house, Kothari Pioneer, today's Templeton, of 1,000 rupees. Now start building that steps. Now they will compound. So I was doing just a lump sum back of the envelope calculation. If you invest around $1,000 every year, and we did that calculation, and you make
$1,000 per month every year.
Per month. And 12% return, you can compound in an Excel sheet, you will find where you will become a crorepati or 50 lakhs. Because for that person, 25 lakhs is also corpus.
Yeah.
So that is the first building piece. The moment he crosses around 2-3 years of experience here, I'm assuming he grows. If the company doesn't give him growth, he'll change job.
Sure.
That gives him a growth.
Yeah.
Now then start accumulating more. So small cap, then comes mid cap, add our insurance, add additional health insurance, those jigsaw puzzles will fall into place.
Sure.
The stage 3 and 4, you are very fluid.
And depending on your circumstances, you will change things accordingly.
And
right?
you can take aggressive calls then. See, in the first 2 stages, I'm sure you will not want something which is a lock-in. So that's why we have not discussed NPS or anything like PPF here.
Sure.
While stage 3 and 4, some kitty of your bucket you can lock in for long.
And you can put that in NPS, for example.
NPS. Last time we discussed.
We spoke about that. And by the way, what we spoke about on Your Money Matters, which was that EPF, if you're a salaried individual, is accumulating all this time, which is incredible. Okay, so you're saying stage 3, you start looking at these products, you build out your portfolio, any gaps that you might have in your investment portfolio, you use that fluidity and agility, as you've pointed out in your Dawa example, you use that time to change it. And you have a significant surplus. You should be utilizing that ability to maximize your savings in that time frame, and then you move up the ranks.
So in stage 3 and 4, it's critical not to be, I'm taking a word out of cricket parlance, Inzamamul Haq on crease, because he never wanted to run.
Right. So that is the time when you put in the most effort.
You need to be someone like Kohli to be able to, even if the other partner is not supporting, return back to the crease.
Yeah. Okay. Or you need to be able to hit sixes like Dhoni, whatever it is, right? So, okay. So we've not spoken about the specifics of investments. And I think that really this is not a conversation that is meant for that. This is more towards giving you direction. But having said that, I do want to ask you this, because a lot of people now are saying, and you pointed this out, this is a reality of the time that we're living in, is that it's so unpredictable. People are facing health situations in their early 40s. And there's this whole mindset that if I'm sacrificing so much right now, then what am I really living for? What am I saving towards? How would you answer? And that is a little bit of a philosophical question, but how do you answer that?
So, just 2 things in life. All of us know it, but it's very harsh to believe. There will be a situation where one of our loved one is no more tomorrow. That doesn't mean you will stop living life.
Yeah.
So in case something goes wrong with you, are you expecting your family to let go of their lives? Answer is no. And that's why the insurance and the portfolio come into play.
Yeah.
And that's so do you want to save 80 rupees, 100 rupees or 20 rupees? We can debate. But you need to have savings. If your parents had not saved, probably it would have been tougher for us.
So I think the answer to that question is that you're not necessarily saving for yourself, but you're saving for the people that are with you. But Sharad, it's been an absolutely fantastic conversation, insightful conversation. Thank you so much for joining me today.
My pleasure, Alex. Thanks.
Okay, so this is something that will require a little bit of reflection for you to think about where in this entire Dawa life cycle that we've spoken about you fit in and how to adjust your finances. Let us know what you think in the comment section and do stay tuned. This is NDTV Profit.
You have to get ready in 5 minutes. What is that one garment that you're going to wear?
Any day sari, even if it rains.
Start with 6 lakh rupees. You're now at 75 crore rupees of turnover in 9 years. What is the origin story? Let me start with that.
As a brand, we thought that this brand should be creating a lot of impact. That's one big reason that pushed us to quit our corporate job. We wanted saris to have a comeback in people's life.
Have you all always been close as sisters? Did you fight growing up? How do you run a company together?
Only constant for each other was us. We had to work upon ourselves, upon our relationship a lot. We finish a fight in 5 minutes, no matter what.
Who wins?
Anyone can.
You pull the card of elder sister, huh?
Not really. I give up very fast. she does.
But tell me where this ready-to-wear option came from, because I think one drawback for a lot of women who want to wear saris is they just don't know how to do it.
Initially, we were so against it, and we said like no girl should learn how to wear a sari. We heard that my daughter wants to wear a sari and she's super scared. And I was like, why not give an option like this? It's such a simple thing. We can do it. We know we can do it.
The Nalli saris generation, for example, may not come to a Suta.
Suta stays ahead of the curve by innovating constantly. Young girls are investing in saris, saying, my first sari Suta, I'll pass it on to maybe my next generation. So I think that's what we wanted, and that's happening.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas like
welcome to NDTV Profit. I'm Charu Singh, and today we are joined in an exclusive chat with Mr. Kamlesh Varshney, the whole-time member of Securities and Exchange Board of India, who has been the man behind some of the most famous and most stringent orders against the stock market manipulation and violation cases. And today he's going to be speaking to us about the egregious behavior of a lot of unregistered influencers and advisors who operate through social media channels, for example, Telegram and YouTube channels. So welcome to NDTV Profit, sir.
Thank you so much.
Sir, first of all, being part of the regulator, I'm sure you must come across a lot of such cases where, the volume might be the issue. And investigating it is an ongoing process, I'm sure. But do you feel concerned about the volume of such violations?
There is definitely a concern so far as this particular sphere of influencer is concerned. We have seen that there are number of manipulations which are going on and which were going on, and we have rightly intervened and corrected to some extent. Still, a lot of work is required to be done. So what we see that these influencers try to manipulate the market through their followings because retail investors believe them and take action as per their advice, and through that they are able to manipulate. So what we have done is that we have taken administrative action as well as enforcement action. So as we have been communicating to the media, so far as administrative action is concerned, we have a very good media monitoring cell. They use AI and other tools to find out which are social media posts or videos which are violative of securities laws, and they ask social media platform to take them down. Many of them are cooperating with us, some are still not cooperating, so we are in discussion with them. And it has been communicated by chairman also that we are taking more than 6,000 such content every month. So that is going on. And then enforcement order, as you said, that SEBI has been passing a lot of enforcement order in recent past against influencers, media personality. You have seen how media personalities are manipulating the market by appearing on television or through social media platform, through so-called education, but it is not actually education. So that is one area where we have addressed. Second area is pump and dump. So basically, I think pump and dump is a more serious violation because a lot of retail investors lose their money. So to explain you in simple terms, if the share price of a particular script at ₹10 right now, and I am long in that script, I want to sell it, exit at a higher price. So through manipulation, I try to create a buzz around that stock. It's a multi-bagger stock, and then even influencers are hired by me, and then I try to create volumes, as you said. And then retail investors unfortunately fall for such tips and recommendations and start investing. And then I, exit at the point that I want to exit, and retail investors are left high and dry. So this is a violation. We have conducted 2 searches, one in the month of April and one in the month of June, where we have detected a lot of manipulation of pump and dump kind. Investigation is undergoing, and action as appropriate would be taken. And we are expecting, particularly the June search is going to bring out many facets of pump and dump operations, which we will be able to control. We are hopeful. The third area which I want to highlight is even more serious, because in the earlier 2 cases, when investor is investing money, it is going in his account. Maybe, let's say he fell prey to pump and dump operation, but the security that he is buying is in his own demat account. Though he cannot control the dump part. The dump part is controlled by manipulators. But till the time dump happens, the money is growing in his demat account. But the third part that I'm covering is where fake apps are created of registered brokers. And then these investors think that I am investing with SEBI registered broker, which he is actually not. So the moment he transfers money through that fake app, he loses the money. It is at that point of time his money is lost, and we have seen a lot of good educated people have lost money through this operation. Now this comes under the domain of police, but because these manipulators keep on changing their telephone number, keep on changing their bank account number, it's not easy to catch them. So what we are trying to address this situation is that first we are going to come out with the UPI validated address, which is going to be implemented from 1st October. And at the same time, we are in talk with social media platform that in your app library, you put a kind of a tick for SEBI registered intermediaries, so that when investors go and download that app, he knows that this is the correct app. He is not falling prey to fake app. So two way we want to address this situation. First, we will validate the app that he is downloading, and second, the payment that he is going to make, if through UPI, we will say that this is validated payment, so he can be rest assured. So these are some of the things we have in mind so far as enforcement is concerned.
So, regulator has been very keen on the enforcement part for the last 2 years, I believe. A lot of good regulations, stringent regulations have come through. But do you think there's a gap in implementation, or it is a road that needs to be taken a little further?
Yeah, absolutely. See, regulation have to be implemented, and we need to have time also to implement those regulations. For example, one very good regulation which came last year to deal with the issue of influencer is in our intermediate regulation, we have said that SEBI registered intermediaries will not associate with a with an unregistered person who is giving advice or who is giving assured return. Now, these two violations you will not associate with. Just to give an example, if I'm a broker, SEBI registered broker, I want to put an ad. So my ad can appear with a registered investment advisor or research analyst, but my ad cannot appear with unregistered investment advisors or research analysts. Similarly, my ad cannot appear with somebody who is giving assured return, promise of assured return. So this we have done to dry out the revenue stream of unregistered influencers. So that is one part. But the problem is, the second stage is indirectly also it should not happen. The regulation says directly or indirectly. So if I'm a broker, I go to social media platform and I tell them that you put my ad to anybody who is giving security market advice. So now once that algo is put by the social media platform, there are chances that my ad will also appear against unregistered person, and then there is a violation. And we have seen this happening. But right now we are not taking action because we are in implementation stage. Are
you giving a warning in these cases?
So not warning, but advice. So warning is at a different level, but we are advising them that, we have noticed, don't think that SEBI is not watching. We are watching. These are the violations. After some time, we will take action on those violations. So you should not associate yourself even indirectly. So these are the actions we have taken. Now the advantage of this is that, as I said, this social media platform are cooperating with us, taking down on our request. We want that they should do it proactively, even when we have not flagged them the violation, because that is the ultimate goal we want to achieve. Now, how do we do that? Is once again cooperation from them, and there is a provision in the same regulation that if we notify a particular social media platform as a compliant social media platform, then this broker, the example which I have given, when he associate with this particular social media platform and by mistake his ad appears with unregistered fellow also, then we will not take action against this broker. So that assurance is there, and this social media platform gets competitive advantage, right? So therefore, and they all have their community policy that they will not host any content which is violative of law. So, what we are asking them to do it, to take down this content proactively, is also in line with their community policy. Now, that is a second stage we are yet to achieve. We are discussion with them, and we hope to achieve that as well. Once we achieve that, you will find a lot of, this problem being addressed to a large extent.
But this will not cause any jurisdictional issues, like within the powers of the SEBI asking the social media platform to remove a certain content?
So first of all, I will tell you that we are all in doing this all in coordination with I4C. Department of Telecommunication, central government has formed a group because whatever this risk areas affect retail investors, it affects all citizens of India. So, very coordinated efforts are being undertaken by all agencies in consultation with each other. Now, talking about jurisdiction, the regulation which I spoke about is our jurisdiction. Now, once that regulation is our jurisdiction, in that regulation we have said that we will notify you as a compliant social media platform if you do this, this and this. They are already doing a lot of things. They have done, they are responding to our request. You must have noticed one of the social media platform has come out with advertisement verification, which is a very good step forward in order to achieve that notification. But one more step is required, right? So, but that is what if you wish to get notified under our regulation, and it is in your competitive interest. So it is very much falls within our jurisdiction.
So, sir, now two questions, very important for a layman looking at you right now on television. Firstly, what would be your advice to retail investors who get lured into these things? What would be the red flags that you would like to tell them about? And secondly, a little light on the investor awareness steps that SEBI is taking.
So let me take investor awareness first. First, I think investor awareness is ultimate, tool to address this problem of finfluencer or all the violations that are happening in security market. Because all the violations are directed towards retail investors, trying to, make them do certain things which are not in their interest. So best way to avoid it is to go to those retail investors, go to prospective investors and educate them, make them aware. So this chairman has taken investor awareness and education program very seriously, and he has said that very clearly in a meeting with us, with market intermediaries, that this is going to be the next big thing in SEBI, and plans are already in place. We are going to collaborate with the state government, we are going to collaborate with government agencies, and all MIIs together. A plan is being formed how to take investor education program at next level. So that is the next big thing which is going to happen in SEBI.
It's completely SEBI's responsibility. You are the one leading it with all the state governments.
We are the one leading it. Now, unlike in the past, where MIIs were doing it independently, this time SEBI is going to lead it along with all MIIs in collaboration with government department. Yeah, in collaboration with state governments. So, but SEBI will lead it. Yes, that is a very clear message from the chairman. Now coming to advice to the retail investors in particular. I think first of all, I will say there is no free lunch. Anybody giving you free advice, take with a pinch of salt. There are only your close relatives or close friends who will give you free advice. Otherwise, all these tips and all, there must be some interest involved that they want you to invest. They want hundreds of you to invest to create a volume. So be careful. Take with a pinch of salt. That is one thing. Second is, if anybody is telling you that you invest here and your money will double in 3 months, 6 months, immediately ask a question. If you have such a magic trick that money can be double in 6 months, why don't you double your own money? Take money in interest from banks. Simple. Bank will charge how much? 10%, 15%, whatever he will charge. But you will double the money in 6 months and 4 times in 1 year. While the bank is charging 10 or 15%, you have doubled you have made your money 4 times in 1 year. Why are you coming to me and giving me advice? Do it yourself. So all this advice which says that double your money, triple your money is all without substance. Exercise due diligence and don't fall for these traps. The third advice is invest in long term. Empirically, we have seen that when you invest for long horizon, depending, it depends on your age, what is a long term for you. If you are young, then probably, you can really plan very well. Because of compounding effect, because of growth that Indian economy is giving, it can be assured that in long term, the return in stock market would be better than return in any other investment, any other asset. So that we have seen empirically, and it is general belief amongst all investment expert that in long term security market will give a better return. But in short term, be careful. For example, F&O, we have seen this future and option, 90% of retail investors have lost their money. And which is for a reason, because these retail investors do not have skill, knowledge, capacity, and risk-taking, understanding, capability to understand the risk. They don't have that capability, and therefore they lose money to big players. So if you are, if you have that kind of understanding, if you have that kind of pocket risk-taking ability, then you can play in short term also. I'm not dissuading. F&O also has a very important role to serve for stock market. But only those people who have capacity should invest there. But otherwise, most of the retail investors go for long-term investment, and you will be very happy.
So just one last question, and you can choose to answer it or not because it is slightly specific. The Jane Street order came today, and it is quite a shocking order with a big quantum. What is the regulator's stance against something that is so big in quantum, especially in terms of manipulation of Indian markets from a foreign player or entities like that?
So as we say always that we don't generally react on individual cases, but as a general, as I have said earlier, whenever SEBI sees violation taking place, we enter the picture, we try to correct the violation, we take enforcement action, but all our enforcement actions are without any bias, completely on merit and proportionate. So we make it a point that all of our enforcement actions fulfill these three criteria, completely on merit, without any bias, and proportionate. So I think with this, I will leave it over there, and it is for all others to judge.
Thank you so much for speaking to us. Thank you.
Thank you very much.
Hello and welcome to NDTV Profit. A very good morning to all the viewers. Joining us on the show today to discuss as to what's happening on the Class 8 truck orders, we have Jonathan Stark, CEO at FTR, joining in. Jonathan, welcome to the show and a pleasure to speak to you as always on NDTV Profit. The kind of numbers that have come out this month, they've actually plummeted to lows back then in 2009, if I'm not mistaken. What has led to this kind of a degrowth? Because the trend was downwards. Probably there were some green shoots that did come in the month of May, but June again has been a downer.
So the primary consideration in all of this is just going through the roller coaster ride of the tariff environment over the balance of 2025. That's really what's driven all of the action and the activity in both the commercial vehicle marketplace, but just then the broader general market as well. And unfortunately, the commercial vehicle side is kind of riding that to the downside at the moment. It should come out probably later this year and start to move back up again, but we think it's going to be a bit of a prolonged negative period because there's more than just the uncertainty coming from tariffs and how they're affecting demand, but then also how that impacts the OEs and supplier and the whole environment that surrounds them, because it's more than just the basic tariff element that's in play. There's a bunch of other critical elements, these Section 232 tariffs that we can talk about in some more detail, the steel and aluminum tariffs, the country-based tariffs. There's a whole slew of them that are all impacting the market and keeping, especially small fleets on the sidelines. They're not making a decision right now to invest in equipment. They're holding on to what cash they have to see what's the best use of it.
Okay, so if you're saying that there is a possibility that you could see a bounce back later on, what's the kind of time period that you're looking at? Because two things that we're talking about over here. One is with regards to where the tariff uncertainty goes. Currently, a lot of conversations that the US is having with various counterparts, and something probably could be imminent. And secondly, when you're talking about the freight market uncertainty as well, how are you seeing that bounce back come in and by when?
So I think a big portion of it is just if there's any certainty when they open their order books on pricing. And that usually happens sort of late in the summer, very early part of the fall. So by the time you get into September, October, and November, you're usually getting orders placed at a good clip, right? And so I'm assuming that we'll get some type of rebounding activity at that point in time, but that is dependent on a handful of things occurring, right? Getting some, maybe not normality, but some stability in the environment that we're in from a macro perspective, and then getting some stability on having a firm grasp of pricing expectations as they go to get pricing for those new vehicles. If they can't get pricing certainty, they're still going to be hesitant to pull the trigger on ordering those trucks.
Okay, and the other notable impact on the back of tariff hikes is the increase from 25% to 50% on steel, aluminium, and fabricated components that has actually taken into effect from the 4th of June. Now, that has raised production costs. Demand has deteriorated. Now, that can only reverse if the tariffs are reversed. As of now, there is no conversation of that 50% tariff being reversed in terms of these products. Does that mean this pressure point will continue, or will this normalize over time?
It'll still be a negative pressure on the market, right? It's going to be an increased cost that's built on everything that's going into a truck or a trailer or anything in that regard. And so that doesn't go away. All right, that pressure, that negative pressure is still going to be there for price and costs, but can at least stabilize and be in such a way that the OEs can price and give firm pricing and have guidance to those fleets so that they at least have the ability to pull the trigger and order equipment. If they don't have any price certainty, then it's very hard for them to have the capability and know that they have the cash to invest and pull the trigger on ordering that equipment.
Okay. Overall, if you talk about the orders that have been getting delayed, people are on a backseat right now. What is the inventory position? Is it that the inventories are also at record high levels and that's what is putting pressure in terms of additional orders?
Inventories are at very high levels. They've continued to be there for an extended period of time. I don't think that that's necessarily what's keeping order activity low, though. Because what happens right now is if they have a need for a truck, they'll order it and they can get it pretty immediately if they're just looking for a standard spec truck and they're not looking to get specifics on that vehicle. They can get it in relatively quick order. So we don't think that it's the inventory environment that's holding back orders. It's really just the demand and the uncertainty environment that's holding back orders. And if they, like I said, if they want to get a piece of equipment right now, they can, as long as they're not picky and they can get it out of inventory and have it, you know, at the dealer and in their service within probably a matter of days or weeks.
Okay, just to understand, if you have any perspective with regards to what role does India play in terms of Class 8 truck orders, because it's mainly the forging companies which see a major reaction in India, you know, when the Class 8 truck order numbers are really low. How big a role is India playing to this?
I don't have any good specifics on sort of the size of the role that India has in the U.S. market, but everybody, specifically those who are dealing with steel and aluminum components, are all getting hit with these significant tariff increases for the steel and aluminum, both the products and the components. So that's going to be an across-the-board hit for anybody who is importing that in. And so India is taking a hit from that. If they can structure a deal with the administration and try to limit some of the other tariff impacts and bring it, you know, at least down to sort of that base 10% and not have it jump up significantly from there after negotiations, that should help mitigate it in some respects. But I don't think anybody has, you know, a really good sense that there's going to be a big change in the steel and aluminum and some of the other commodity-specific tariffs that have been introduced.
Right. And very lastly, on the regulatory outlook as well, the US Environmental Protection Agency had proposed new emission standards for heavy-duty trucks that was originally scheduled to take effect from the 2027 model year, right? However, in March, the EPA said it would reconsider the 2027 greenhouse gas norms for trucks, and this had further uncertainty to future purchase decisions. So how are you seeing that aspect pan out?
So let me go back to 2024. In 2024, we produced a little over 330,000 Class 8 trucks in the market for US, Canada, and Mexico. All right. Going into 2025, so at the very end of last year, we were anticipating we would still need to produce somewhere north of 300,000 units in 2025. We have now brought that down to 240,000 units. It's a 20-some% reduction in our expectations on what is going to get produced this year. So we've had this pretty big delta in change in expectations in a relatively short span of time, just the last basically 6 months. Now, if we try to go forward to what does that mean for